Good evening, members. I welcome to you for this study circle meeting on the subject integrated approach on capital gains, profits and yields of business and profession, and other critical aspects of IT. And to handle this, we have our own chartered accountant, CA.Chandrashekar Shetty sir. May I request Chairman, Bangalore branch, to escort the speaker, and please hand over the floor to Kitty. Thank you, Chairman. Members, I have a privilege to introduce today's speaker, C.A.Chandrashekar Shetty sir, fondly known as Shetty sir. He is a highly qualified academician and practicing chartered accountant with over 25 years of experience, a passionate educator. He founded CAPS, a leading CA coaching center in Bangalore, known for providing 2,500 CAs chartered accountants and 128 plus all India ranking, including first ranks. He is also a founder president of CAPS Foundation, an NGO committed to education and social welfare, having served over 15 lakhs meals during the pandemic and executed landmark projects like CF Amrit Bharat Science Park and Shala Samruddhi, benefiting over 1,000 government schools. For this, he would require a big round of applause. Shetty sir is also a gold medalist from Bangalore University and a national rank holder. He is sought after speaker in forums like ICI, ICFAI on taxation, accounting and motivation. With this small introduction, we present before you C.A.Chandrashekar Shetty. Sir, over to you.
Sri Gurubhyo Namaha. Very privileged to stand in our Mother Institute. Almost 3 decades of relation with this institute, so very happy. Before I start the session, it is a study circle meeting. So, and since the name only says it is a study circle, so we don't have to think it as a one-way traffic. Let us make it as a circular discussion. And today's discussion is very generic in nature, and a lot of people with high knowledge, maybe much higher knowledge than me also. So I have accepted this invitation basically to enrich my knowledge. However, some addition, value addition, if I am able to make it, I am happy. Right. So with this, let us straight away get into the session. Just to start with one small little interpretation, humor of taxation. So audit checklist, are books maintained properly? Yes, all kept in the suitcase. That's what we go by literal interpretation, because I am basically an accountant with little income tax knowledge. In accounts, we normally say the law of faith, whereas income tax is the law of fact. Whatever is given in the law, we have to read as it is. Probably wherever there is a necessity, then we go beyond the law of fact. Okay, so law of faith. So we have to go for literal interpretation. So I will be discussing various points today, and as the title we kept, we tried to connect business income and capital gains. Not that I will be specifically touching upon the recent amendments. I will touch some of them also, and some of the issues probably would have been there for years. Maybe 1 or 2 issues which I would have come across very recently. I would have not known that this kind of issues also would have happened. Maybe because of a little bit of teaching experience, wherever we have come across some questions that also we have incorporated. Now, before we continue with the issues, let us try to understand what is the fundamental difference between two heads. The discussions are today's discussion. One is PGBP, and next one is capital gains. As the name only says, profits and gains of business or profession. The name only goes so huge. So we can understand the business income covers plethora of provisions, not only just the taxation point of view, volume point of view, but also from so many other relevant point of view. Normally when someone asks TDS is applicable, we say, oh yes. But a learner of the TDS, we think normally it's only for business people. But not necessarily, even a salaried person may come under the TDS provision, but generally that's what the interpretation. Whereas when we talk about disallowances, we mainly talk about business income. Capital gains, we hardly have any disallowance. Or when we talk about old regime versus new regime, capital gain doesn't have any difference. Capital gain is absolutely same with the old or new regime. So, from that perspective, business income has got huge plethora of provisions and obviously high disputes, whereas capital gains limited. Point number one. Business income, we have two possible methods of accounting. Either you can follow cash system or you can follow accrual system consistently. I have some issues regarding that, that's why I just mentioned about it. So 145.1 says you can either follow cash system or you can follow accrual system, but follow it consistently. Now is it practically possible sometimes to follow the same? We'll discuss, especially when we take some section like 28.6a where it says conversion of stock in trade into capital asset. How does it work? Or when you talk about 44 AD or 44 ADA, how does it actually work? We'll look into that later. Then business income, normally is a regular transaction, and profits and gains we say. Profits are the regular incomes. Some gains also might come into picture. So PGBP covers not only the profits but gains also. But the capital gains covers only gains because the name only says gains. However, there is an anomaly there itself. The heading says profits and gains of business or profession. But if you read 45 within the bracket 1, which is the charging section, there the word profits or gains. So even under capital gains, the first sentence of the capital gain talks about profits or gains. So just by the chapter heading, we cannot conclude that business income covers only profits and gains and capital gain doesn't cover profit at all. We cannot say that because there is an anomaly 45.1 itself. Nevertheless, then capital gains, the taxation is normally on accrual basis, but there also we have some cases of taxation on receipt basis. For example, 45.1a insurance, 45.1b ULIP, 45.5 compulsory acquisition, etc. will the receipt basis. And also under 50C, we also have a notional basis of taxation. Like I sold my building, 100 lakh worth of building at 160 lakh, where the stamp value is much higher, more than 110%. Even without having earned income, you may have to pay the taxes. There's what started with the 50C. Now it's extended even to the business income, 43CA. It is also there, 56.210. So prima facie, capital gain is supposed to be accrual, but it is also on receipt basis in some cases, and some special cases, unfortunately, on notional basis also. We have an interesting question at the end. We'll discuss about without even earning income, if I invest, so will I be able to get an exemption more than even 10 crores? I have an interesting scenario. Maybe the elite crowd here can help me out, because the law says as of now you can get only 10 crore exemption under 54AF, but we have done some mathematical jugglery where more than 10 crore also we try to get an exemption. Right or wrong, I don't know. So we just try to do something. Right. So with this, let's get to the first one of my favorite ones. Earlier, residential status, we would have just touched once and left. Probably now, 100 times we read, maybe 101st time we get some other idea. This is what I have experienced. Every time when I have been teaching for almost 25 plus years, every time I teach, I get some other idea. Even 1 week back, I got some idea which I will be discussing. Now, just to give an idea of residential status, section 6 within the bracket 1, section 6 within the bracket 1 talks about the residential status of an individual. So, 2 RMRs, clause A, 182 days of work. I am not going to detail of it, so which everybody knows. So, 182 days I am not touching in today's discussion, not relevant. So, second one says, you should have stayed in India for a period of 60 days or more and 365 days or more during the earlier 4 years, which I am sure most of us are aware of it. So, 60 days in the relevant to previous year plus 365 days or more in the earlier 4 years. This is also very basic provision under 6 within the bracket 1 within the bracket C. Now below that there is an explanation where it says 60 days should be substituted by 2 marks again. 182 days. An Indian citizen leaving India for the purpose of employment abroad. So there also I don't have much dispute. But one small question I have. Now 60 days plus 365 days we said. Now if I stay for 182 days or more, I being an Indian citizen, whether I have to still satisfy 365 days condition, or is it enough if I just come under 182 days? This is my first question. So just to get into that idea. So just let us take an example. An Indian citizen, he must be an Indian citizen, being a crew member, he stays in India for 182 days in the relevant previous year and 200 days in the earlier 4 years. If I go by the first condition of 6(1)(a), it says you are resident. That's it. Ek bar ho gaya, condition satisfied. That's it. But if I go to the exceptional condition, so 60 plus 365 days should be read as 182 plus 365 days. So whether I should also satisfy 365 days is the question. I repeat the issue. So I am not talking about 6(1)(a). I am talking about 6 within the bracket 1 within the bracket C, where it talks about 60 plus 365 days. I am sure all of us are aware of it. Now 60 days should be substituted by 182 days. The point to be noted is 60 days should be substituted by 182 days. When the law uses that word, so can I say, I being an Indian citizen, for me 60 should be substituted by 182 days is fine. So should I also look into 365 days condition is the question. So if you look at the law, if you look at the way the income tax has accepted it, we all conveniently said 182 days or more is satisfied. Why are you looking at second condition? My personal opinion, I do not totally agree with this point, because if that would have been the case, they should have used the word. In this case, we should have satisfied first condition only, 6(1)(a). Why did they use the word substituted? If I say Rajgopal sir has to be substituted by Mr. Ramesh, that means instead of him, someone else should be there. So 60 should be replaced by 182 days. Plus 365 will remain as it is. How it will change? I really don't know. I don't know why it has not become an issue, but it is not. And it is more so relevant because there is also one more condition being added. An Indian citizen or a person of Indian origin, say settled outside India, comes to India on a visit, and if his Indian total income is more than 15 lakh, then 60 days should be substituted by 120 days. So if 60 days have to be substituted by 120 days, here obviously we see 120 plus 365 days. If that is the case, in the previous example, why we are getting stuck only at 182 days, that is the question which I am discussing. So 60 plus 365 days, in my opinion, wherever it is applicable, it should be 182 plus 365 days only. If it is not 365 days, it will be called non-resident, because from taxation point of view, is it better to be resident or non-resident? Generally, we can give the discussion forum. I know seniors are there. I am not questioning anyone. I am just taking some response so that it can be little interesting. So when we talk about 60 plus 365, so 60 should be substituted by 182 days. So if that is the case, even in the case of a normal scenario of Indian citizen, it should have been 182 plus 365 days. Instead of we are taking just 182 days only. That is my opinion. Second point is, in this example, if you look at it, so 182 days is satisfied, 200 days is not satisfying 365 days condition. That means he may be called non-resident, and if he is a non-resident, we know our taxes will be lesser. Always, it is better to be non-resident or resident? What is your opinion? Generally from taxation angle. Okay, wait for some time. So it's starting, it may not be great. We'll prove that even being resident may be more tax beneficial. Okay, I always, being a Pakka Indian, I love to be a resident. But every time when I say in the class, from taxation angle, it's better to be non-resident. It was not happy mood, but today I have a scenario where you being a resident, you will end up paying lesser tax. You being a resident, you will end up paying lesser tax. But a unique case, we'll discuss that later. Let's come back. Right. So let's consider that. So taxation point of view. So as most of us think, resident is little more taxing compared to the non-resident. That's what our understanding. So slightly technical discussion. I hope all of you are reasonably aware of the section 6 provision. That's why I just go through the provision once more. An individual is said to be resident in India. Individual is said to be resident in India. 6 within the bracket 1 within the bracket small a. He stayed for 182 days or more. I am not discussing that one today. 6.1c says he should have stayed in India for a period of 60 days plus 365 days. Clear? All of us clear? 60 plus 360. This 60 days shall be replaced by 120 days, which will be replaced by 120 days if that Indian citizen or a person of Indian origin. Indian citizen, all of us know, we are all Indian citizens, born in India, blah blah blah. Person of Indian origin means 3 generations. Self or parents or grandparents should have born undivided India. That is the difference. So this is basically a typical case. Let us take Rahul Jain marries a South African girl. So Rahul is an Indian citizen, South African girl is a non-Indian citizen. Then their child will become person of Indian origin because so Rahul is born in India. So either yourself or parents or grandparents are born in India. Then the law says if they come to India on a visit, the total income, the exact word verbatim, the total income excluding from foreign sources, exceeds 15 lakh. That means they say, even though you are outside India, but you have a lot of income in India, so then moment you stay in India for 120 days plus 365 days, I call you a resident. Is it clear? Shall I repeat? So you being an Indian citizen or a person of Indian origin coming to India, and in India, the wordings use is total income excluding from foreign sources. Very important. Total income excluding from foreign sources. From now onwards, I use the word Indian total income for this purpose. Is it clear? Indian total income. If it's more than 15 lakh, so instead of 182 days, it should be 120 plus 360 days. I hope all of you are clear. Whereas, if Indian total income is lesser than or equal to, we normally use the word does not means less than or equal to 15 lakh. In such a cases, instead of 120 days, go with your 182 days condition only. So, I don't come into 182 days condition as of now. So, we are disputing about 120 days. So, I repeat for the last time, an Indian citizen or a person of Indian origin coming to India on a visit, Indian total income greater than 15 lakh, we have to consider 120 days plus 365 days. This is the law. All of us are clear about it? Fine. Now, what is that Indian total income definition? Received in India plus deemed to be received, section 7. Earned in India plus deemed to be earned, section 9. Plus income from a business outside India or profession outside India being controlled from India or set up in India is also part of the Indian total income. So, received in India is covered, earned in India is covered, income from business controlled or profession set up in India is also covered. So, these are the total income for this definition purpose. Now, let us understand with the help of a small example. So, I have taken Indian citizen Harshita, her husband, South African friend, Ujao. I hope in CA we can talk about husband, wife, etc. Because so some places they say you should not talk. I thought natural things should be spoken naturally. Correct, no? So if it's something unnatural, Rajgopal sir, correct, no? We should not speak. What do you say, sir?
Indian origin.
Huh?
Indian origin.
Yeah, Indian origin. Okay, fine. So, alright. So, Harshita is an Indian woman marrying a South African Ujao, and they have a son by name Majao. Whatever name, we can keep. Right, no problem. So, Harshita is very important. Harshita is what? Indian citizen. Ujao is not an Indian citizen because she married him, South African husband. And Majao is a person of Indian origin. These are the 3 people. So, I kept some incomes, very simple state. Rent from Delhi. Delhi is in India. Received 10 lakh. So, minus 30%. So, next slide. Income will be 7 lakh, which all of us are aware. Next, FD interest. Let us say income itself is 7 lakh, same. Now, business control from India. So, all the 3 cases, same income, 80,000, 80,000, 80,000. SP interest, the area of interest for all of us now. SP interest is 50,000, 50,000 and 30,000. I kept slightly lesser income intentionally. Then, foreign income, some South African income, interest income, etc. So, the gross income, what they receive is some high-fi, 27.3, etc. It's not allowed. So, at the end, I hope it's visible. Stay in India is 175 days. So I am keeping 120 days to 182 days in between. That's the number I am keeping. And earlier 4 years, he was there for 365 days or more. So I said 100 days in each year. Clear? So I repeat. In the relevant previous year, he stayed for how many days? 175 days. In the earlier 4 years, he was there for 400 days. That means about 3. So that means condition is satisfied for about 4 years. So now coming to the case, let's compute the Indian total income for this purpose. So for this purpose, what is Indian total income? So house property minus 30%, then FD interest covered, PGBP taken care, SB interest, gross total income. I am in old regime. Under old regime, I get 80 TTA, all the cases, and we are all below 60 years cases. Okay, all below 60, I get 10,000 each. So when I do this, first and second case, their total income will be 15,20,000 each. And third case, his total income is exactly 15 lakh. I hope all of you clear with the example. Clear? Gajendra? So fine. So 15.2, 15.1, some names I know, don't mind. Okay. So that's why. They would have thought that I forgot on the name, that's why I'm just calling again. Okay. 15.2, 15.12, 15 lakh. So now going by the interpretation, first two cases, their total income is above 15 lakh. So let's go one by one. Harshita. So Harshita is a resident or non-resident? Basic. Harshita is a resident because above 15 lakh and also 120 days is satisfied. Right. What about Ujao? Ujao, this law is not applicable because he is not an Indian citizen. He is not an Indian citizen. So very important. So Harshita is a resident. All of us are agreed. Ujao is a, without thinking about other conditions, we have some 618, etc. Ujao is a non-Indian citizen. He is not coming under this provision. If he is not coming under this provision, you have to go to the original provision only, 60 plus 365 days, and he becomes resident. He becomes a resident by the original condition, because this condition is not applicable to him. So I am sure some of you have got stuck there. I repeat. Harshita's case very simple. An Indian citizen settled outside India, coming to India, Indian total income is more than 15 lakh, 120 days plus 365 days is satisfied. That's why she is a resident. Is it clear? And once she is a resident, corresponding provision 6 within the bracket C says she is a R but NOR, resident but not ordinal resident. And the income chargeable in the hands of R but NOR are same whatever we include here. Received in India, earned in India, income from business control or profession set up in India. I hope all of us are clear. So Harshita is concerned, no confusion. Is it clear? Right. Now coming to Ujao. Ujao, this condition is not applicable because he is not an Indian citizen. Neither Indian citizen nor person of Indian origin. That's why. So you have to go to the original condition. What is the original condition? 60 plus 365. He satisfies. 60 is there, 365 is a resident. He is a resident. And unfortunately, if he is also satisfied other conditions of 66A, he may also become RM1. So it is almost going against our emotions. Harshita, पक्का हमारा इंडिया का बेटी है, Indian citizen है, okay? She might become a resident or non-resident. Whereas Ujao, we thought he is an outsider. He may become resident and ordinary resident. This is income tax law. This is, law is merciless. So 60 plus 365 days. So he is a resident and he may also become R and OR. So first two cases, let me just conclude. Harshita's case. So the contention is not first two cases, third case. So first case, Harshita is concerned, no confusion. So resident, 15.2 lakh income continues. All of you agree? Whereas Ujao case, non-citizen, he is not an Indian citizen because he is a resident as per the original conditions of 60 plus 365, and if he also satisfies other conditions of 60 like 9 years non-resident etc., he may become R and OR. His global income may be taxable in India. So global income may be taxable in India. So those two are not the area of contention for me. Now coming to Majao. So Majao is an interesting area. Majao, that's right. So 15 lakh is the Indian total income. So it is exactly 15 lakh because his SB interest was slightly lesser. So in that case, 120 days is applicable to him or 182 days? 120 days is not applicable. 120 days is not applicable. 182 days is applicable. 182 days is not possible because he stayed only for 175 days. That means he becomes non-resident. He or she becomes non-resident. I repeat, the question doesn't stop here, so we need to continue. I'm sorry if it's going too much over the head, but this is how I was confused by my students, so I want to pass it on. So, in the case of Majavo, he is a person of Indian origin, comes to India on a visit. He is not satisfied 182 days. First condition, not satisfied. Is it clear? Second condition, 60 plus 365, he has an exception. 60, since his Indian total income is less than or equal to 15 lakh, 60 days should be substituted by 182 days only. That means he doesn't even satisfy the second condition. That means he becomes a non-resident. When he becomes a non-resident, his income cannot be 15 lakh. His income should be excluding the third point there. That PGBP control, that should not be taxable because only received in India, earned in India will be taxable. So his income will be 14.2 lakh. I repeat, Harshita's case, Indian citizen. So she became initially for the purpose of total income. Incomes considered as received in India, earned in India, controlled from India. Since she continued to be R but NOR, total income remains same. Previous page and this page, the total income remains same. No confusion. Now coming to Ujavo, so he cannot come under exception. Since he doesn't come under exception, so he has to go to the original law only. 60 plus 365 is satisfied. Since 60 plus 365 is satisfied, so he becomes resident. When we check other conditions are presuming 9 out of 10 years non-resident, blah blah blah. He is satisfied. He becomes R and O. His total income, which was otherwise 15.2, which was used for resident status, has become now 24.2 lakh. 24.2 lakh. Whereas Majava case, very important and interesting, we are continuing with that. His total income is 15 lakh, less than or equal to 15 lakh. And for him, 60 plus 182 days shall not apply. For him, 182 days only apply. But he is satisfying only 174 days, 175 days. Hence, he will become a non-resident. And if he is a non-resident, only two incomes will be taxable. That is, received in India, earned in India. Business control, what we included for the definition purpose of the total income should be excluded. That's why his total income will become 15 minus 0.8. Any confusion about this? Any question about this? All of us are clear? Totally confused? I'm an FCA, like many of us are fully confused about it. Right. So now, very important point is, this is, in my opinion, this question is unanswered even till now. Old regime versus new regime. Maybe lawmakers also would not have thought about it. Now, under old regime, 80 TT is available. 80 TT is SB interest up to 10,000 rupees. Okay? If I am resident 60 years and above, 80 TTB, Buddha, Buddhi, whatever you can easily remember, 80 TTB. So, it is 50,000 rupees. So, 80 TTA only for SB interest up to 10,000, even for a non-resident, is available 100%. 80 TTB only for resident 60 years and above, okay, FD interest and SB interest, so we get 50,000. So we are talking about all the scenarios below 60 years. So now the question is, the total income, I read reasonable couple of times after this question arose, the definition in section 6, they are not defined what is total income. So we have to go with the general interpretation, 2 within bracket 45, what is total income. Total income is total of incomes as referred in section 5. The general computation we should do. So total income should be, as our understanding. Am I too fast? It is going toward dollars? Okay. So total income should be technically all the 5 heads of income. Salary, household, blah blah, add karo, then set off, etc. Do it. Then gross total income. From the gross total income, let us deduct the chapter 6A. Now, that means total income should always be after chapter 6A, whatever is applicable. Under the old regime, we will get all the benefits. Under the new regime, normally, so only 3 deductions if I am an individual. 80 CCD within the bracket 2, 80 CCH within the bracket 2, then 80 double J double A. So first one is about pension scheme, next one is about Agniveer scheme, and the last one is about joining additional employees extra 30%, etc. So these 3 are available even under the new regime. So now if you go to the Majava's example, so under the old regime, so we said he is a non-resident. Majava is a non-resident. We can put non-resident. And So let's say 24-25 previous year. So 25-26 we are still doing a lot. 24-25 if you go by the old regime taxation, it remains same. So if you go by the taxation, it comes to 248. You can just trust the figures. Up to 10 lakh, 1 lakh, 2,500, blah blah blah. It comes to 2 lakh 48. Whereas if you consider the default new regime, so his total income will be increased by 10,000. Last column, I'm talking only about last column. So 15 plus 0.10 because it is 10,000 not every. 15 lakh 10,000, and if it's 15 lakh 10,000, his Indian total income is more than 15 lakh. If it is more than 15 lakh, he will become resident. He is not a non-resident. So if he is a resident, so the tax under the new regime for 15 lakh is only 148,720. So which is better then? So I'll not say, my question is not about old regime or new regime. My question, what I started with, you want to be resident or you want to be non-resident from taxation angle? You can't say now. So earlier the answer was very straightforward, it's better non-resident. Now if you look at this example, you can all dispute if there is a mistake in this. So even after becoming resident, your taxation is lesser only because of the lawmakers either they have not defined what is total income separately, so they would not consider any old regime is going to die shortly, okay, why simply wasting time, they would not have bothered. So this is my point. So if you are becoming a resident, your taxation will be lesser only because of the new regime versus old regime computation. Yes, sir.
What about his global income if he is a resident?
It's all but NOR. I stopped at it's a good point, sir. Sir, if he satisfies that condition, then it will become 66C. 66C will become R but NOR. If it is R but NOR, global income will not be taxable. Only 3 incomes which are already included. Received in India, earned in India is income control from it. Okay, sir? Perfect. So even after becoming resident, his tax will be lesser, and almost 1 lakh tax actually we are seeing. I hope you all of us have understood. Right. Now I have one more similar question. How do you compute the total income? Now, pure vegetarian question only. Okay. Chicken first, egg first. So total income has to be computed first, 15 lakh. And then decide about the residential status, or decide the residential status and then you have to decide the total income. My question is, now if you go by this example only, so let's take an example of Majao. So we said 14.2 lakh is total income for the purpose of section 6, correct? For the purpose of section 6 is total income will become 14.2 lakh under which regime? Under the old regime. So whereas if I go with the new regime, his total income will be 15. So now you have to answer now whether residential status should be computed first or total income should be computed first. Which one you have to compute first? I do not have an answer. So it all depends on, in my opinion, tax beneficial. Okay. So again, I think they should have given some clarity. Okay. They should have given some clarity. For this purpose, this is the way you should do it, because when you do talk about the total income computation, there is no clarity whether I should do section 6 first or total income computation separately. Yeah, this example I think it will make it clear. Harshita's example, if you look at Harshita's example, her total income is 15.2. Assuming she is a 60 years plus, because 80 TTB is available only for resident individual. So if she is 60 years plus, then 15.2 lakh minus 50,000, assuming she has SB interest every, it will become 14.7 lakh. So just because of the 80 TTB, our total income will be below 15 lakh, which is an old scheme. Whereas if she is coming at a new regime, our total income will be above 15 lakh. So that anomaly continues. Right. This one, next section is just a reference. Earlier I think a lot of confusion was there whether we should claim 80 TTA or only 10-15 or mutual exclusion. Now there is a clarification by the department also, reasonably old one. Okay. So both are available. If you are going to post office SB, up to 3,500 is exempt under section 10-15 plus 10,000 rupees 80 TTA available. If it is a joint account, 7,000 plus 80 TTA is available. This is just a clarificatory statement because since the discussion came, I just thought I'll touch it. So it is not that if you claim 80 TTA, you cannot claim 10-15. Unlike 10-10C, there is exemption, what's the relief? So 1010C is about VRS exemption we have, and relief under section 89, mutually exclusive. But these two sections can go hand in hand. 3,500 SB interest you can claim, plus you can also claim a 10,000 rupees under ADTA, TTA. There is one more area, I'm sure some of you have observed. Why I am specifically touching is because of the excessive usage of the technology. Sorry. Then we including me, whenever I say we, first I take myself as a negative person of the debit and then all of us are included. So what we do, we put everything in the Winman or some software and we compute. We don't get into the details. But somewhere I think being chartered accountant, we should go beyond the AI also. So yesterday also when we were doing this PPT, we had an interesting case I was discussing with my colleague. So my sincere request to all our chartered accountant friends, do not totally depend on AI. I was very happy when the AI gave a wrong answer that the chartered accountant will always outsmart AI anytime. So I am very happy, and see, like someone has rightly said, maybe 10-15 years back when 25 years back when computers came, everybody said, oh, chartered accountant will lose their job, etc. Nothing happened. Although when pandemic came, most of us thought our job will come down. Anybody felt your job has come down? Thanks to 1st July 2017 GST introduction. Anybody's work has come down? I don't think so. Any chartered accountant. So it's always increasing. We are happy. We will always have a problem of plenty. So same way, today AI, everybody is talking about AI, etc. That has given us challenge, no doubt. But we definitely have much better work than that. So classic example, 44 BBC. So our office colleagues, I am not an expert in AI, okay? So because my son, the great Padamchan teacher sir, he says, AI is okay, but natural stupidity is dangerous. So that's why I totally believe in it, so I don't want to get into that as of now. So they sent the PPT and showed. The moment I saw, I knew this is not done by our colleague because they are reasonably good. I said, this is the job of AI only, because AI cannot use the brain, okay, like a chartered accountant. So 44 BBC, it's a new section which is introduced. We are talking something and that AI is giving something else. So then today when I was talking, he said, sir, if you say no, you are wrong. Then you say, okay, so I am wrong. Whatever inputs you give, that will give the answer. So it's like, unfortunately, I am worried. No doubt it's good, AI is very good. But unfortunately, it may become something like a garbage in, garbage out concept which was there that the computer was initially introduced. Okay, that should not be like it. So we should be extremely careful and we should be happy that AI is not giving the right answer always. So if we use the right answer always, then we are worried we may lose our professional work. That's right. So you should be happy for it. So every challenge you should look at the opportunity. Now let's come back to one more interesting taxation about normal income and surcharge rates. As all of us are aware, about 200 lakh, surcharge rate for 5 slab SSEs being individual HF, AOP, BY, AJP, artificial juridical person, for 3+1 incomes shall be restricted to 15%. So what are they? 111A STCG, 112A LTCG, 112 LTCG and dividend income. Why did I say 3+1? These three, first one, 111A, 112A and 112 are categorized as special incomes where the tax rates are fixed by the income tax itself, whereas dividend is a normal income. This is not special income. It is taxed at a slab rate for the individual. So, for the first three categories, we don't have an issue. When it comes to dividend, so what should I do? Whether I should consider basic exemption limit 10%, 5%, 10%, etc. first karna, or dividend should be used later. So we have a simple calculation. So let's take an example of salary being 300 lakh and dividend being 200 lakh. So total will be 500 lakh. Old or new regime, up to 500 lakh, maximum is 25% surcharge. Okay. Only under the old regime, above 500 lakh, we have 37% surcharge. Otherwise, it is only 25%. So we calculate 500 lakh. So now we have a dividend 200 lakh and salary 300 lakh. Why I am specifically mentioning this is, please look into our softwares because softwares are giving, unfortunately, sometimes higher tax rate than what is supposed to. Okay, this I have tested in our office. So when we tested, because Maybe because the software person who is preparing, they think department should not have an issue with my software. That's a department trending. It may be the approach, I don't know. I have no comment on it. But we being a chartered accountant, we should be always for tax planning. I am definitely not for tax evasion of the avoidance, but tax planning should be. So in this example, 300 lakh is the salary income, 200 lakh is the dividend income. So I am talking about a scenario, first 2.5 lakh, let's say old regime, nearly 2.5 lakh to 5 lakh, 5 lakh to 10 lakh, 10 lakh. So first 10 lakh rupees, should I use this dividend income first or should I use the salary income? Because for the salary income, in the given example, surcharge will be 25% because it is about 200 lakh. For the dividend, maximum surcharge is only 15%. Shall I repeat? Is it going over that? Don't know. This is one of the big confusion when I take a session like this. So should I take like our students because it will be too low. So whether it should go too high, I don't know. Okay, let me repeat. Salary income is 300 lakh. 300 lakh falls in what surcharge? Black bracket? 25%. All of the dividend, you cannot have a surcharge more than 15%. Is it clear? For dividend surcharge, irrespective of whether total it comes to 500 lakh, 800 lakh, it's always 15%. So my question here is, the dividend computation tax, should you put within 10 lakh or 10 lakh slab rates or should you put it on 30% slab only? The question. So I hope you have reasonably understood the question. Now I'll tell you the tax. If I go with the salary being first utilized, so like first 2.5 lakh salary, then dividend comes at a 30% slab, straight away about 10 lakh. My tax will be X amount, 186, 32, 250. Whereas if I use dividend starting, so first 2.5 lakh dividend is exempted, then blah blah blah, it comes to 186.71. So the logic is, please go with salary first, then use the dividend, because dividend surcharge will be least percentage. Higher tax rate, lesser surcharge will have a savings in the tax and vice versa. I hope you are reasonably clear. So it is better to go with the first example, that is 186, 32, 250 the first case where salary is utilized first, because please understand our software, AI, etc. cannot think in that fashion. They will simply go by whatever the information we feel. Okay, it has to be first salary income first utilization, because they get taxed lesser rate, and on the salary the surcharge is higher. So that's why put salary first and on the later surcharge be little lesser.
How the department is calculated?
Yeah, department may be calculated ulta, sir. I don't know about the department way. Okay, so for that question I have an answer in the next question. Department has disputed something, we went ahead and we fought and we won. I'll come to that. But this point I don't know what the department is doing. If someone has an experience, you can think about it. Okay. Second question I have that's related to that. Clear? Right. Then this is an interesting case. It happened in our client case only. I'll not disclose the client name, confidentiality. So again coming to that 200 lakh. Above 200 lakh for 3 plus 1 income, we have surcharge, maximum capital at 15%. All of us are clear? Maximum 15%. Now, when your total income is slightly exceeding 50 lakh, 100 lakh, 200 lakh, there is something like a marginal relief. All of us are aware of it. Okay. Now, marginal relief is available under 87A also. Here also for the total income, if it exceeds 50 lakh, 100 lakh, 200 lakh, there is a marginal relief. So we had a very peculiar case where the total income was normal total income was slightly above 200 lakhs, slightly above. We also had 112 income. 112 income, I hope all of us are aware. Long-term capital gain, tax that earlier it was at 10% after 1 lakh, now it is at 1,25,000 relaxation with 12.5%. Let's not talk about tax rate as of now. So in that scenario, if I have a special income, 111, 112, etc., so should I lose the benefit of margin relief just because I have a special income? We computed, my calculation said lesser tax. Then I discussed with my office team, lesser tax. Then I discussed with my son also. He also said this is right. But when we filed the return, department said nothing doing. You cannot get a margin relief. This is a practical case. You cannot get a margin relief. Then we said no, nothing. What? Then we also discussed with our client, are ready to take a chance of filing a case, appeal, etc. They said okay, let's go ahead. And we went and we won the case. No issue. This is almost a well settled with us case. The case is like this. So assuming you have a normal income, 200 lakh total income, then 2.01 crores. So margin relief it exceeds. That's first two columns are just to understand the margin relief. It's slightly exceeding 1 lakh extra. That's why you get a margin relief of the extra income, whatever that you're supposed to pay, you get a margin relief. So first two cases, there is no confusion. So when it comes to case 2, your normal income, that salary, house property, business income, etc., is 200 lakh. 112, all these are before 23rd July 24 case for all practical purpose of today's discussion, unless I mention otherwise. So let us think about before, because this case happened on 2 years back. 23rd July 24 ke pahle, because 23rd July 24 is the D-day where the tax rates have substantially changed in capital gains. We'll discuss that later. So 200 lakh is the total income, 200 lakh is the total income, and 112 is the special income you had. So department says no, special income cannot be considered for this purpose of margin relief because anyway it's getting taxed at a lesser rate. So they try doing it. Our calculation, the tax should have come to 66,58,500 if it is a 200 lakh normal income and 112 income is 10 lakh. I hope it's visible there. I am reading the third column. Whereas if you have got small increase in the normal income, 200 lakh has become 2.01, 2 crore has become 2.01 crore. So there the tax saving, tax should have been, instead of 66,58, it will become 67,58. That is a 1 lakh extra. This is how the margin relief works. I repeat the calculation. Is it becoming too much of maths? Okay, I repeat it. Okay, after that, no maths, only starting. Okay, so Rajgopal has told the definition of maths. A long back he has told. We are good friends. Maths definition, all of you know. I am a hardcore lover of maths. Okay, but still, just for fun. Mentally affected teachers harassing students. Mentally affected teachers harassing students. Dangerous, but it's okay, just that. So now if you look at the third column and fourth column, your income has increased by 1 lakh, your tax also has increased by 1 lakh. This should be the calculation because the margin relief working. Whereas department says, no, we cannot give you the margin relief. And if you look at the fifth column and sixth column, the tax has increased almost by 6 lakh because they are denying the margin relief just because you have special income, and because of special income, your total income is about 200 lakh. Now why this dispute is, what they are telling is, because of the special income, your total income is going substantially ahead of it. But my contention was, our contention was, so your surcharge for those 3 plus dividend income is always 15%. So why are you disputing unnecessarily this point? You must give margin relief. So basic level it did happen, but we went to the next court, we won the case and we got a relief sum. We are absolutely fine. I hope all of you understood this point. So when you have a special income and then the total income is marginally exceeding 50 lakh, 100 lakh, 200 lakh, 500 lakh, you must get a marginal relief if you are otherwise eligible. You must get a, department cannot deny. My personal opinion, and also subject department has accepted it for the time. Yes. So the next area, let us enter the business income. In business income, 28 within the bracket 6A was introduced. This is the fund I used to have 10 years before. So but that fund has become a law. 45.2 is a section in capital gain. So where it said, conversion of a capital asset into stock in trade lead to capital gain. There is a transfer mechanism. So whenever there is a capital asset being converted into stock in trade, so stock in trade, then there is a capital gain, but that is arising only when you ultimately sell it. When you ultimately sell it, that's the law. And I thought it's a very beautiful law, well thought law, perfect law. So just to give an example, so Rahul Textiles, we have a textile business, okay? Capital asset to stock in trade. So he had, let's say, land as a capital asset. He becomes Rahul Real Estate. So converting capital asset to stock in trade. So T-shaped balance sheet. T-shaped balance sheet. Now I also wanted to know the opinion of all our learned members here. For the non-corporates, now there is a guidance note, etc. So I really don't know what's your opinion. My personal opinion is unfortunate that for the non-corporate at a small level, we have to do the vertical format. I'll tell you why. The students who are coming from the academic background, they learn still the T-shaped balance sheet at a school level. Yes, you may dispute tomorrow, sir, the vertical format alone, they may be introduced at a school, PU level, etc. But are we not comfortable when you look at a T-shaped balance sheet, left side, right side connection, instead of sources and application? So the non-corporate and the guidance note, I'm sure all of you are aware of it. I also wrote to the CA Institute, why is it necessary at the non-corporate small level? Why are you requiring it? But still, whether the institute is listening or not, I don't know. But my personal opinion is definitely not warranted, not required, not deviate. So now in the T-shaped balance sheet, I'm a traditional thinker, T-shaped balance sheet, because Raj Gopal says, T time yes, so, right, yes. So T-shaped balance sheet, we have the land is converted into stock in trade. So he became a real estate businessman. So just by shifting one asset from capital asset to fixed asset to current asset, PP to current asset, where is the income, sir? Where is the question of it? So the lawmakers have said, okay, perfect, I understand. Tomorrow when you sell that stock in trade, erstwhile capital asset. Earlier it was a capital asset. Now it is a stock in trade. You have to pay the tax. At that time, two incomes will arise. So from capital asset till stock in trade, any accruals increase, it will become capital gain. From stock in trade, the actual sale value is business income. So 45 is in the bracket 2, very categorical. So two incomes in the year of actual sale of a stock in trade. This is the law. There is no dispute. Right law. Now 28 which is the bracket 6A talks about ulta scenario. What is ulta scenario? Conversion of stock in trade into capital asset. So conversion of stock in trade into capital asset. That means what? I am a real estate businessman. In my current asset I have a land. So now I say no, real estate nahi, maja nahi hai, chhod do. I will start something else. So I convert the stock in trade into capital asset. 28 which is the bracket 6 says, moment you convert your stock in trade into capital asset, so it is a business income. First point is, how is it going hand in hand with the accrual of cash? Because 145(1) says, business income should be taxable on accrual basis. Now, my limited understanding of accrual, I am shifting one item from one place to another place. Capital gain I understand, because the word capital gain is based on the transfer definition of 2 within bracket 47. Transfer includes conversion, that is the definition. Here, I am shifting from current asset to fixed asset. Business income should be only on accrual or cash basis. Where is it accruing? What is it accruing? How is it cash basis? I didn't understand. In my opinion, it may not be right law. They have different reason. I know that there is different reason of tax evasion, etc. They want to bring, but is it right in the spirit? I don't know. So, first question is it really accrual? So, whether when I am converting stock in trade into capital asset, is it accrual? Is the question. First question. So, second question is 49 which is the bracket 9 says, moment you convert stock in trade into capital asset, fair market value on such date shall be the consideration. So 2868 itself says fair market value should be considered as an income. 2868 itself says fair market value. That fair market value, tomorrow you get the benefit when you go for a capital gain taxation. That's fine. So fair market value. So business incomes normally should have been on accrual or cash. 145 never talks about a notional taxation. 145 talks only about accrual or cash income. So already house property ho gaya. House property you are already taxing in non-notional basis. So 5 properties, 2 properties, self-occupied, 3 notional. Okay, done. So capital gain, yes, I agree, because land building lot of misuse. But business income also you are taxing on notional basis. Then 145 why you are doing amendment? You should have amended 145. It is not happened. So in my opinion, it may not be right. May not right. More so, very interesting now. Stock in trade into capital asset I converted. So you said the business income. Business income, fair market value. Very important question. I am following cash based accounting. Whether 2860 arise or not. So because I have an option of following cash system. So cash system means paisa aana chahiye. Mera bank account mein paisa nahi aaya. So where the question of taxation? So can I dispute? Because 2860 doesn't have a non-obstante clause also. 28 is the charging section, you know. So it doesn't say notwithstanding anything contained in anything else. They have not mentioned it. If that is the case, so if I am following cash system, can be still taxed? In my opinion, it should not be, because cash pages of account, I have not received the money. So very purpose of cash system is defeated. That's why 2868, 2 points need to be looked into. That is the point which I want to discuss. And also, what about the impact of 43CA? So because 2868 talks fair market value will be the consideration. So if it is a land, so 43CA says in the case of a land, there are 3 sections which are connected. One is 50C, one is 43CA and 56(2)(10). All the 3 in the case of land, building or both. Whenever there is a transfer by whatever mode, so 3 conditions. Condition number 1, date of agreement and date of registration of sale deed. You have to check. Second one is, if the consideration into 110% and a stamp value, when you compare, if the stamp value is lesser, they say chodu. So like Krishnamurthy is my friend, 1,000 lakh worth of asset, I said give it to him at 950 lakh. Law says okay, I don't have problem. But the difference should not be more than 10%. The second condition. Third condition is, moment that first 2 conditions are tested. So your consideration to be considered is actual consideration or stamp value, whichever is higher. So 2868 talks about fair market value. If it is a land, should I also consider stamp value? Should I also consider stamp value? The answer probably yes, because 43CA is applicable for all kinds of land, building or both. So wherever there is a fair market value, you may, I don't say you shall, you may also have to consider stamp value. So if the stamp value is higher than the fair market value, I am worried, because consideration there is fair market value or stamp value, whichever is higher. So not only fair market value, your stamp value के ऊपर आपको tax करना पड़ेगा. So there is a possibility of 2868. I hope it's reasonably clear. Yeah. This is one unique one which many of us would have missed, and I just thought. So almost before tea time, Rajgopal sir, okay, I'm talking about tea only, right? So rubber, coffee, tea, all of you are aware. Growing is a agricultural income. Converting it into business is a business income. There is a ratio 60-40, 65-35, etc. Rule 7, 7, 8, etc. Now an interesting provision which many of us, because today commercial farming is gaining huge relevance. A lot of people are moving toward the same. So it might be of relevance. I just thought of touching this. So let's take a simple. I'll not get into the question answer. Just give an example part. So first year, whichever estimate you are not bother, we have a composite business income of the tea growing and converting into tea powder, 50 lakh. There is a section in place called 33AP. It says, if you have deposited the money in the tea development account, coffee development, rubber development account, etc., that amount or the 40% of profits of such business, very important, 40% of the business income, 40% of profits of such business, whichever is less is allowed as a deduction. So, our profits are 50 lakh, into 40% comes to 20 lakh. Assuming I deposit only 10 lakh, whichever less is 10 lakh. That means my composite business income will be 40 lakh. After 33AP, you have to split into 60-40. If it is a tea, 60-40. Coffee also normally roasted, grounded 60-40. Otherwise it will be 75-25. Rubber 65-35. So I repeat. So first composite income, 33AP deduction देना पड़ेगा. इसके बाद whatever comes, you have to go for 60-40. Agricultural income is exempted and business income will be 40%. Assuming I have got some brought for business loss, I cannot adjust against 40 lakh figure there. I can adjust only against 16 lakh because that is the business income. I hope all of you clear the example. Clear? Yes. Now let me go back to the next year. Next year what happens? Assuming that 10 lakh what I deposited, what can I do? Masti karenge, cinema jayenge? No. It should be used for the scheme. There are so many conditions. Now assuming I use out of 10 lakh, 6 lakh for my asset purchase. It may be non-depreciable, doesn't matter. As long as that is as per the scheme, no issue. 3 lakh I use for office premises. So normally if you look at 32(1)(2)(a) additional depreciation, or 10AA, etc., office premises you don't get the benefit. So if you use for office premises, the 3 lakh rupees will be taxable. Then one more important point, you have withdrawn the money in 24-25, but you spent on 5th April 25. Unfortunately, it will be taxable because if you have withdrawn, you have to utilize the same within the same previous year. That's why, if anybody is connected to this topic, please avoid withdrawals in the fag end of the year. March 15th you have withdrawn, you could not utilize, that's a risky proposition. That's why don't do it, because whatever you withdraw, you must utilize the same for the scheme within the financial year. In this example, you have utilized 5 days later, it is going to be taxable. The interesting point is, sir, 3 lakh plus 1 lakh, 4 lakh fully taxable? Nahi, because when I gave the deduction earlier, deduction was before 60-40, even this 4 lakh has to be split into 60-40. This is the point I wanted to conclude. So, earlier we had given a deduction of 10 lakh rupees. This 10 lakh rupees was before 60-40. Out of the 10 lakh only, we are getting the taxation portion. That's why 60% is going to be agriculture income again. So, even if you have done a default of 4 lakh, the taxable amount will be only 1,60,000 and not 2,40,000. Is it clear? Yeah. Just a reference. Under section 35, there are a lot of clauses for donations which are not eligible anymore under the new regime. New regime, you are not doing. They should make everywhere all sections put together one. Earlier, it made some sense. 125%, 175%, 35-2A, 150%, all those things. Now, all the donations, if I am not wrong, from 1/4/2020, only 100%, simply waste of space. Probably DTC when it comes, they might do all this. So, donations under 35, we have a lot of clauses, but don't have to waste our time and look into each sub-clause because all are giving only 100% reduction. And also, one more small anomaly which is continuing, unfortunately, even today. 35-2AB. 35-2AB talks about, normally, before I continue, normally, business income or any head of income, whether you are individual or a company, more or less same, unless some special section. So, for example, depreciation, whether you are individual or a company, calculation is same. Section 35, individual company section is same. 35-2AB is only for company, first point. If you are a company involved in biotechnology, Kannadalli biotechnology ಅಂದರೆ ಗೊತ್ತಲ್ಲ, parents ಹೇಳ್ತಾ ಇರ್ತಾರಲ್ಲ, sound advice, okay? So my students always say, we should always take the advice from our parents. They give sound advice ಅಂತ. First 90% ಮುಗಿಯೋದು, ಮತ್ತೆ 10% advice, sound advice ಆ ಥರ. So biotechnology, BT, and if you are manufacturer of any produce, which is the 11th schedule, which is a negative list, you don't get this benefit. So you should be involved in the biotechnology or manufacture of production of article or thing other than the 11th schedule. That 11th schedule has got alcohol, etc. For that, what research is required? So they say leave it. So you get deduction. Earlier it was a beautiful provision because my P&L account by revenue 200 lakh to this kind of expense 100 lakh to taxable profit 0. You heard right? I repeat. Earlier, not now. My revenue 200 lakh to expenses 100 lakh. My taxable profit. Some of you think what are the point of this fellow's maths? 200 minus 100 is 0 because before 2000 maybe 2020 when it came reduced that. 35-2AB gave a benefit of almost 200% reduction. So revenue expenditure and capex 200% reduction. 100 rupees spent kara, 200 rupees reduction. That made sense. But now the same beneficial law is hitting me unfortunately, negatively. How? So now let's take a simple example. I have a building plant machinery used for scientific research. Say 100 lakh. And this year it could not be absorbed by revenue. So I have to carry forward, as all of you are aware. So unabsorbed scientific research capital expenditure can be carried forward for any number of years. So there are three identical triplets: 32-2 depreciation, 35-4 capex or referred as 35-1-4, then 36-19 family planning expenditure of the companies. So they can be carried forward eternally. Any number of years can be adjusted against any income any year except salary. They say 71 within the bracket 2 year. I do not agree because 71(2)(a) is a separate block. Business income and salary cannot be set off. Depreciation comes under chapter 4D only. So why that should not be allowed? There is a separate discussion altogether. But nevertheless, I will not discuss that point. So now, what the question for me? 35(4), like sometimes we say extra cautious. SLM method of depreciation we say, no? Straight line method of depreciation. Okay? So extra cautious, it is okay. So what 35(4) said was, capital expenditure referred in 35(1)(4). It's only that expenditure can be carried forward for a number of years. So 35(2)(a) also has a capital expenditure. So what about 35(2)(a) capital expenditure? 35(2)(a) capital expenditure does not qualify for eternal carry forward. If you claim 35(2)(a) capital expenditure, it is like a normal business loss can be carried forward only for 8 years. In order to come as exception building. Why? Because building is anyhow not allowed under 35(2)(a). Since it is not allowed, you automatically claim under 35(1)(4). I clarify again. 35(2)(a), you can claim revenue expenditure as well as capital expenditure. As of now, only 100%. Now it is meaningless for me to claim any expenditure under 35(2)(a) because if I put inside 35(2)(a), all of them will become business loss and I can carry forward only for 8 years. Whereas I have not put under 35(2)(a), I would have claimed under 35(1)(4), which I would have carried forward for any number of years. I hope all of us are clear. Clear? Yeah. This is one more very interesting ambiguity, very surprising and shocking. Like 54, some of you would have observed. So 54 exemption. I sell a building, let's say 15 years back. Sell a building in South Africa, invest in the New Jersey, exemption in India. Trust me, that is the law. Because in India, what was not done in 54 for years, rather decades. So now, maybe 10, 12 years back, they amended. Residential house property in India, they have added that word. That in India was not there. Okay, that's simply it is an accidental omission. Let's accept it. I mean, it is a corrected law. Now, 36(1)(8). If you are involved in providing long-term finance, if you are involved in long-term finance for eligible business, it is basically AIIHR, agriculture, industry, infrastructure, residential or housing sector. These are the 4+1 categories covered under 36(1)(8). If you are like IDBI giving loan, okay, for industrial development, then whatever the profits of such business into 20% or reserve created, whichever is less, there is a reduction available. This is a very old law. This is not something new. Now, confusion for me is if when they define eligible business, even today, if you can go and check, eligible business means industrial or agricultural development. Very happy. Agricultural development, yes, it has to be promoted. Industrial development. Then, development of infrastructure facility in India. Development of housing in India. So, when they use the word in India, they have suffixed those words specifically for those two. So, are we trying to say for agriculture and industry anywhere in the world, if you give the finance, you get reduction? In my opinion, as I started my discussion today, little interpretation, 100% yes. For two reasons. One is, it is not an accidental omission. Second line only when they can put the word in India. First line if they are not put, you cannot say that no sir, they didn't have ink to add. You cannot say that. That is not acceptable. So I feel with some logic maybe. So our friend countries like South Africa etc. So I give a loan, you go and do South agriculture there, industry there, industrial agriculture. Very interesting because I know a lot of people who are doing industrial activity in foreign countries, and if you get it, and you may get a reduction. Because this is definitely not an accidental omission. Maybe intentional, they want to give the benefit. Maybe if you have observed, you take it. If you are not observed, hold on. Maybe that should be the objective, I don't know. But the word in India is not available. Is it clear? Is it going too much? Boring? No, not yet. No, not yet. Because obviously, no, yeah. So if anybody, so since it's our own family, so we have a little fun. Is it audible? Sound connection, Lala? Okay, right. So, sound is ready. What is that? Alcohol sir will be honored. Oh, too much effort in the better. Easy na?
Income tax is
Income tax?
still effort.
Still okay. Income tax is effort. Okay. Basically, wife asked the husband. So, in Kannada, those many of you will understand Kannada. So, she asked, sir, please, sir, not compulsory that we should visit with that. What that? So, wife asked the husband, so before the marriage, or initial period of my marriage, I was love ಮಾಡ್ತಾಯಿದ್ರಿ ಈಗ ನನಗೆ ಮಾಡ್ತಾ ಇಲ್ಲ ಅಂತ. So husband says ಈಗ ಹುಚ್ಚು ಬಿಟ್ಬಿಡ್ತು ಅಂತ. So that's all. This is just for fun. So I cannot take any session without fun because for me life is being happy. Okay, so there's nothing wrong in telling the joke, but some people say, no, I'm a chartered accountant, I should be like this, etc. I do not agree with that. I always say for this, for all the learned people, Swami Vivekananda statement, Swami Vivekananda when he was in London, someone asked him, why don't you dress up like a gentleman by looking at his turban, etc. Then Swami Vivekananda responded immediately saying that, in your country, dress makes a person gentleman. In my country, character makes a person gentleman. So let us not think that, oh, I'm a chartered accountant, I should be like this. I think let us live happy. Okay, if something makes you happy, be happy. The small things let us enjoy, isn't it? Yeah. My personal opinion may not be right. It's okay. Yeah. There is one more very important discussion. 194T and 40 small b. So, what's 40b? My student friends are great, if you can answer. What 40? Kiran? Don't ask. After becoming seen, should not ask. Correct? No, you know. What is 40? What is section 40? What is section 40? Student friends can ask. My students, if anybody is here, yeah. Yes, sir. What is section 40? Okay, what does it talk about? At least. About? Remuneration allowed or not allowed? Amount not allowed. Section 40 cannot be an 11th section because we chartered accountant, we cannot use the wrong words. Only up to 37(1) is the deduction section under business income. Beyond that is a restriction or disallowed section. The title of 40 is amounts not deductible. Amount not deductible. Not we say. Chalta, so like happily married we say. So happily married, isn't it? Okay. So that question will never arise. Okay. Either you're happy or married. Both cannot go hand in hand. That's the point. Now, so like Rajgopal sir, my wife always says happily married. So she's happy I'm married. That's it. Nothing beyond it. Okay. It's okay. Just for fun. So yeah.
That is why it's secure.
I know. Yeah. Agree. Yes sir. So 40 talks about amounts not deductible. Amount not deductible in the following cases, like 40 small a about TDS related, 40 small b is about remuneration etc. to the partners. So there is small change in the last year law, which I am sure all of you are aware of it. Interest on any amount advanced by the partner in excess of 12% shall be disallowed. So in a plain language, interest to partner, capital, current, loan, advanced by whatever name called, into 12% or as per the deed, whichever is less is allowed, excess is disallowed. Then remuneration, so salary, fees, commission, allowance by whatever name called, that's called remuneration. So for me, any expenditure by the firm come under 3 categories. Rent of a building owned by the partner, this doesn't come under 40B. Doesn't come under 40B. Rent of a building comes under section 30 if it is a building. Then if it is a machinery, furniture, etc., Rahul? 37(1), not 31. So 37(1), excellent. So it comes under 37(1). Okay, no, don't think I am preparing my come. Okay, randomly I asked. Okay, right? Yeah. So, rent of a building comes under section 30, allowed as an expense. This is again anomaly. We can talk days together. Why sir, who is a genius, he says, I know 25% of income tax. I say, I know only maybe 3% of income tax. It's fine, because that's what income tax law is all about. Okay. So, one place we say firm and partners are separate. Indian Partnership Act, firm and partners are same or together? Same or separate? So, Indian Partnership Act actually same or they are same. Income Tax Act, they are separate, because firm has to pay separate tax, partner has to pay separate tax. Correct? No? But when you go to section 75, every section 78, when a partner retires, no, this is share, you cannot carry forward. That is anomaly. You have not understood, I repeat this point. So, under Indian partnership law, firm and partners are one and the same. There is no separation. Under Income Tax Act, 2 within bracket 31, person includes individual, inter area, person includes firm also. That means firm is separately taxed, partner is separately taxed, especially from 93-94, very clear categorical understanding. Before 93-94, we had some going inside, coming out, etc. Whereas, now if that is the case, you should either stick to one standard. So, firm is separate. What's happening? Let's take an example, XYZ 3 partners. So, 90 lakh loss. Firm is separate, no? Firm should continue, agree. But if partner retires, then they say, no, X share cannot be carried forward. If a partner either retires or retires. So that's all, correct, no? Retirement and death, okay? So retirement or death. So expire of the policy or expire of the policy holder, whichever is there. So they say you cannot carry. That is the normal, that is the secondary part. Now coming to this point, 40B, you are paying rent, I said allowed under section 30, and with house property income to the partner. No confusion there. Now, if you are paying remuneration, so whatever amount you pay to the partner, it should be either rent, I said it's not called a 40B. Everything else comes under 40B, interest or remuneration. That's it. So you call them whatever name. For remuneration, the revised limit from the last budget is up to first 6 lakh of book profit, 90% of book profit or 3 lakh, whichever is higher. For years together, decades, it was actually 3 lakh. Now they increased it to 6 lakh. First 6 lakh. 90% of book profit or 3 lakh, whichever is higher. On the balance, 60%. The balance 60%. Again, the definition of book profit is not same as MAC book profit. MAC book profit actually means book profit only, accounting ka profit. But here, book profit means business income after allowing interest to partner, but before allowing remuneration to partner. That's not the area of contention. So the deduction now is, this is the percentage. Now we have some presumptive incomes. Presumptive income only we can discuss for 10 hours minimum, okay, without taking in-depth questions that way. Let's not worry. I will not go, they will not permit also. Now 44 AD, you are doing a business. So when you are doing a business, up to 200 lakh turnover, 8%, etc., all of you know. 44 AE, goods carriage vehicles, we have some 7,500, etc. Now, myself and Chandran, we are partners in a business firm, or child accountant firm, all of you are aware, 40B deduction is not allowed from the presumptive income. That is, child account firm, all of us should be knowing, 44 ADDA, 44 ADA, child account and ADDA we say. So, whatever the revenue into 50%, you cannot get 40 small b deduction, which is very unfortunate, because most of the cases actually is a required law, and if you require, you have to go for books of account and tax audit, which I am sure all of you are aware. So, when it comes to it, myself and Chandan, we are running the lorry business. Coming under 44E, we can get 40 small b. 40 small b. So, business के लिए 40B नहीं मिलेगा, profession के लिए नहीं मिलेगा, but if you are having a goods carriage vehicle, you get 40B. So, those who are having 44E goods carriage vehicle business, they shall get a 40 small b. Interest also, remuneration. Again, there is a small anomaly there. 40B uses the word remuneration, whereas 44E says interest or salary referred in, yeah. Break up, put 6:30. Okay, I got it. Okay, right. So Okay, 2 minutes. So 40 small b uses the word remuneration, whereas 44 AE says salary or interest. In my opinion, that remuneration and salary should be right there. Same, let us not dispute that one. So 44 AE में reduction मिलेगा, whereas 44 AD, 44 AD you don't get a 40 B reduction. This is about the first point. Now, most important point what I will discuss before we break is 194T TDS about 20,000, 2 years back it has come. Okay, if you are paying, you should do it. Now, multiple questions there. Question number 1. We are debiting to the PL account, let's say 21% interest. Interest debited in the PL account 21%. How much is allowed? 12%. TDS you have to do it on 21% or 12%? Unfortunately on 21%. And I really don't understand how can they block like this, because 40B and 28.5 have a harmonious construction. 40B says this is a remuneration interest allowed. 28.5 says whatever is allowed in 40B will become your business income. So if 21% if you debit, 12% is allowed, income is only 12%. So now 194T says, okay boss, you debit 21%, allowed 12%, income 12%, but TDS should be based on 21%. How is it? How can there be TDS on something which is not an income? Because very objective of TDS section is what? It should be TDS, tax related source on incomes. No doubt there are some one or two exception case, withdrawal of cash, 184N, there's a different story. But very purpose. Now this section should have gone harmoniously. Whatever is allowed, whatever is the income, that should have been a TDS. But now what you are saying, I have read it again. If anybody else has read it in a different way, please guide me. I read it multiple times. It says whatever is the amount you are debited. So remuneration or interest, allowed or not, they don't discuss about it. It may be a case where only 3 lakh rupees may be the remuneration allowed, where the remuneration debited to PL account may be 100 lakh in some of the forms. TDS has to be on 100 lakh. Your income is only 3 lakh, so you offer 3 lakh. Yes, TDS 100 lakh into 10%, 10 lakh. Income 3 lakh, TDS is 10 lakh. Wow, brilliant, no? So this is it. Yeah, yes sir. Yes sir.
Now my profit is yes, 100 lakhs. My this thing is 3 lakhs. So definitely we get a notice in that case.
Yeah, definitely. That's a practical issue. Okay. So obviously 26 years, and I always joke, years 26. Years 26 intangible asset. Okay. So something from the intangible source we get 26 years related questions. Okay. So that we can't help it. So more importantly, even in the next budget, I'm sure 2025 budget also they have not corrected it. It should have been definitely corrected. Someone would have made representation. I don't know whether our issue is represented or not. I don't know. But you debit on that you do TDS, how is it logical? It should have been on the amount which is allowed as an expenditure, permissible expenditure, and it's the income, which is not an income. Debit karo, TDS karo, I really don't understand. This may not be the correct interpretation. With this, I think Girish is telling me we have to stop now. So we'll give a break, okay? We will come back after 15 minutes, 15 minutes. Yes, sir. Thank you. Welcome back. Let us resume our discussion. Presumptive incomes. Every time when I make this statement, I recall in my students in the class, like every time when we start the class, we say, as all of you are aware. That's what every teacher starts with a joke. If all of them are aware, why will they come to the class? Right? No. So we start with that. Right, nevertheless. Here I'm sure. So all of us are aware, nevertheless. So we have interesting presumptive taxation provisions. Last couple of years, some more additions also. 44 AD talks about eligible business, less than or equal to 200 lakh turnover, 300 lakh special case, that 5% or less cash receipt. 44 AE, goods carriage vehicle. 44 ADA is about specified professional. Point to be noted. 44 ADA is applicable only for 44 AA within the bracket one specified professional. For our academic purpose, I call it as a film T Aki, accounting, film artist, interior decoration, legal, medical, film T, technical consultancy, engineering, architect, authorized representative, company secretary, information technology. So these are the specified professionals under 44 AA, which is the bracket 1. So very important in the context. 44 AA 1 talks about only those specified professionals. So the next question is, do we have other professionals also? Obviously yes. So when I say they are specified, that means there should be some other professionals. They are natural. And 100% the answer is in the positive for that question, because 44 AA subsection 2 says in case of every business and other professions. That means other profession has to exist. So let us not deviate. 44 AA 1 talks about specified professional. Now 44 ADA is applicable only for those professionals referred in 44 AA 1. So 44 ADA says when your gross receipts lesser than or equal to 50 lakh. In the case where your cash receipts are less than or equal to 5%, then up to 75 lakh. So you have to offer 50%, then what's applicable to most of us, chart account, etc. So 44 AA1 and 44 ADA as a harmonious construction, both go hand in hand. That's clear. Now let me come to 44 AD. 44 AD, so is it applicable to other professions? Is the first question. So what is your opinion? So because 44 ADA is applicable only for specific profession. So whether other profession, for example musician, dancer, they are all professionals. Even for me, barber is a professional. So skill, knowledge, expertise is not like not that we chart account, we require a certificate. Barber is a member of Barber Institute of Technology, certificate आना चाहिए. ऐसा कुछ नहीं है. So you are using a skill knowledge, you are a professional, no doubt about it. So now, can I apply 44 AD to other professionals? Have you done it in your office? Because you would have come across some professionals like Bharatanatyam dancers, etc. So have you offered 8% or 50%? So this is what normally see every time it's for the students also, because I always, so no doubt I love my profession CA, but more than that I love to be a teacher. Okay, I don't want Punarjanma, but if there is a Punarjanma, I want to be a teacher only. That's a fun. Okay, so from that perspective only I am talking. So normally whenever my class is a good number of people. So if I say 1 hour, I will extend minimum another 1 hour. Okay, that's all. Today I will not do. Don't worry. So today is not a class. Don't worry. Okay. So, but why? Because moment I give a break, after break, so the gravity works better with our stomach. Because whatever goes inside the stomach, I think it will pull our eyes down. So that's all gravity. So that's what I think. After having PhD, probably most of us are having a good gravitational force. Okay, jokes apart. Now, for a musician or barber, lighter note, okay, will you offer 50% or 8%? 50% cannot. First point, 50% cannot. You cannot offer 50% because 50% is only for 4481. He is not covered there. Next, can I cover the 4481? Can I offer 8%? Yes, we have done it in our office. Yes, but do you think it is logically correct? Because a chartered accountant or a advocate or a musician, if you look at the kind of expenses, don't you think more or less they should be same? So there also expenses should be. I know my son is always genius, no doubt. Before even 4480 came, he used to say the thumb rule should be in a professional, it should be 60% income offer karna hai. But lawmaker said okay 50%, fine. So why chartered accountant has to offer 50% income, whereas a musician has to offer only 8% income? It is unfair. But anyway, so assuming we are right. So that means all the professionals are coming under 44 AD, you have to offer 8%. Point number 1. Point number 2. Hold on. This is again a question which has been asked by one of my intermediate students. I said hats off. Final student, etc. fine, but intermediate student, this kind of question, wow. So I am a musician. My gross receipt is 60 lakh, 100% online, digital. So up to 75 lakh I can offer. I can go up to under 44 ADA if I have a 44 ADA. Otherwise I come under 44 ADA, under 44 ADA. So now I am a musician, I said, I come under 44 ADA. I have to offer how much? 8%. Do I have to go for tax audit? Now being a chartered accountant, we are all chartered accountant because nobody is no outside. Yes sir, karna audit fees aata hai. So don't, that answer I am not accepting. Do you think we should do the tax audit? I am offering. So 60 lakh into 6% or 8% I am offering. Should I go for tax audit? No? Yes? Sanjay sir says no. So yeah, yes, no sir? Yes sir, yes sir.
Logically, I should take that 50%.
But sir, 50% is not required. Sir, with due respect to you sir, sorry. 50% cannot be offered in my opinion because 44 ADA says, because as I started my discussion, income tax is a little interpretation. 44 ADA is only for 44 ADA 1 specified professionals. So musician doesn't, unless he is a film artist. If he is a film artist musician, he comes there. Okay. Otherwise, he will never come under 44 ADA, sir. We cannot come under, my personal opinion. I hope others also agree with that. He cannot come under 44 ADA. 50% nahi hai. 8%, 6% I am okay. My question now is, should we go for a tax audit? 60 lakh gross receipt hai. 8% I am offering, 6% I am offering. Should I go for tax audit? So answer can be as Sanjay sir said, yes sir, no, or someone else saying yes. The reason is 44 AA1, 44 ADA go hand in hand. Both of them are talking about specified professionals. Clear? Whereas 44 AB, B for Bengaluru, clause B doesn't make any distinction between the specified professional and other professional. 44 AB small b says, in case of every profession, when the gross receipt is more than 50 lakh, more than, you should remember the figure 60 lakh, 50 lakh you should go for tax audit. So I'll add one more masala. 44 AB says, so proviso says, if you are offering income under 44 AD or 44 ADA, you do not have to go for tax audit. There is a proviso below 44 AD. Properly confused? I repeat the law. 44 AA subsection 1, specified professional. Clear? 44 ADA, adda, for easy sake. They are also specified professional. Clear? Harmonious. 44 AD, so does it cover musician? Before I continue, so I continue the definition of 44 AD. 44 AD says, eligible business means any business other than 44 AA. So that means what? Technically should cover musician also. So the next question may be, sir, musician is a professional, is he covered under business? So whether, because he is a musician, so musician is covered under 44 AD. I'll just take you through that provisions if it is available. Sorry. So let's take an example. My friend Chandran is a resident individual. He is a musician, has gross receipt of 60 lakh. So out of which there is a 90% receipt in digital mode. So if he is a musician, he doesn't come under neither under 44 A1 nor under 44 ADA. That's clear. So the questions here is 44 ADA is only for 44 A1. Clear. 44 AD covers every business and other professionals like 44 ADA too. So now I am saying musician is a other professional. That means, and for all practical purpose, business include profession. For majority of our understanding, there are a lot of case laws also. Business include, we have CAT versus PVT Raju, Honorable Supreme Court decision. Politics is a profession. I am serious. Honorable Supreme Court decision, 1975. Okay. So politics is a profession. So I would have never in politics. Maybe at that time it was a profession. Today it can be dangerous than the business. Not even just business, sir. So you don't underestimate the word business, sir. Dangerous than the business. It's okay. Right. So musicians should be covered under this provision. 44 AB small b, basic provision of the tax audit, where it says every profession gross receipt above 50 lakh, you should go for tax audit. 44 AB, it means tax audit is compulsory even if I am offering income under 44 AB. So just to conclude, this I do not have a 100% authoritative answer. I give two answers. You decide whatever you want to do it. First point is musician having gross receipt of 60 lakh. My personal opinion, 100% you should come under 44 AD. There should not be any dispute on it. Now when I offer 6% or 8%, those are confused. 8% is the normal case, 6% for the digital receipts like account pay, check, etc. If I am receiving in digital mode 6%, if I am offering as per proviso to 44AB, B for Bengaluru, okay, there cannot be a tax on it because proviso says you are already offered 44AD, 44AD. But my question is 44AB small b, normal provision says you are a professional. Any professional, your gross receipt is above 50 lakh. Since it is above 50 lakh, you should come under tax. That's the anomaly what I am looking at it. Anomaly because there is no clarity saying that above 50 lakh rupees, okay. And I am worried, our intermediate sales material, if I am not wrong, says tax audit is required. So we being chartered accountant should be happy, but technically it is not right. Especially when you are offering 8%, 6%. If you are offering below 6%, any of books of account tax rate compulsory. That is dispute I am not having. But in this case, when your gross receipt is above 50 lakh for a professional, not covered under 44A1, even when you are offering 6%, 8%. But I am having one more confusion there. Sir, you said you offer 8%, 6%. But books of account is showing some other figure because audit has to be based on the books of account. So what income you have to offer? Actual income? Okay, we'll get back to that question also now. We have other questions also. We'll come to that question also. Okay. So let us keep that question aside for the time being. 44AB is one question which I am disputing with many of my chartered account friends and my students every batch, every time. 44AD, that 8%, 6%. It is an optional section, it is a compulsory section. Everybody says chorus is an optional section. Okay, let us assume it is the optional section. I am doing a bakery business. I am doing a sweets business, which most of us know the margins are very high. I was stunned when one of my great teachers in Mundkur, if someone knows, a small bakery, he asked, business what will be the business? So normally bakery business, because we think, 5,000 per day on a higher note. I was shocked, 75,000 per day. Now many of you don't directly take a book or don't take a bus to Murwa stores. But this is how we don't know some of the businesses, we are underestimated, we are not even what you thought. So the business, assuming the business, bakery business, sweet business, turnover, everything today, phone pay, karo, everything is online. So let us assume 300 lakh. That means 300 lakh is 6% yes to offer. How much yes to offer? 300 lakh, because up to 300 lakh, no, there is no necessity to get into anything else. So 300 lakh into 6%, 18 lakh you offer. Into 10 years. Next 10, 180 lakh. One story, optional we said. Next point. Actually my margin may be as high as 60%. Bakery sweets, 100%. The margins are high. Majority, I think, so high. So think for a while, margin is 60%. What is the income you have declared? 300 lakh into 6%, 18 lakh into 10 years. For totally, how much? 180 lakh. So one day income officer comes to your house, coffee, tea. We say, Bunny, Bugs Bunny. So whatever. He says, so your accumulated asset should be 180 lakh. Assuming you have not spent anything. But actually how much you have? 300 lakh into 60%. 180 lakh into 10 years. 1,000?
18 crores.
So 1,800 lakh or 18 crores. How do you prove this? Now can you say, no sir, you only told me to make the black money, I did it. No, that's exactly. So if you are, so if, one second, I'll come back, sir. So if that is the case, I am talking about a very genuine case where the business margins are as high as, some of the sweets are 200% margins they have. I know that, okay. So if that is the case, can I simply say, and that too I am telling, the turnover is 200 lakh, 300 lakh rupees if they can. Assuming they are having a roaring business, they can do in 3-4 different people name, okay, in their family. And 1,800 lakh is the net asset what you have, but you declared only. So why I ask this? Because we all have agreed that it is the optional section. 4481, what it says, turnover into 8%, 6% or any other income claimed to have been earned by the assessee. So now claimed to have been earned by the assessee is an optional section or compulsory section is my point. So now I say, no sir, you told me, see, the original intention was very clear. Small, chota-mota business, you keep books of account. What kya karna hai? Turnover, you keep, I have a turnover document into 6%, 8%. But when you know genuinely your incomes are much higher, much higher, and if you still do not offer, because last minute, sir, client came late. That's what all of us will say, including me. That's what client came late. That's what I did. So it's a different fact that we never did till, including me. I'm talking only about me. That's not to anybody else. So this is what I think we should change. Okay. So client came late. Etc. We should change now. We should all change this answer, sir, because our own peace, our own benefit, our own heart. What do you call the maintenance? We should start working from the beginning only. Let us do it. So why do we inform the client that September 15th is the due date? Many of the 90% of the clients didn't know. We only said no. Why did we inform? So 10% of them they are aware of it. Why did we? So they thought. So in this scenario, you are accumulated so much. So 68 to 69 deemed income. So 115 BBE, 60% plus 15% plus 4%. So do you think it is attractive? Yes, sir. Your point.
I don't exactly remember the section.
Yes, sir.
Projects are like this.
Yes, sir.
8% or 6%, whatever you are declaring, that is the minimum. Whatever it is more, we have to declare more. The projects are very clear.
So no, that's all. Actually, 4484. So if that is suppose if it whichever is higher means that means it cannot be an optional section. So income to be offered should be compulsory. So what we generally have taken, we means more all of us. Sir, whatever turnover into whatever. Okay. So whichever is higher if you are offering, that means 44 AD is giving you an option to offer lower income. So higher income only when it is what you earn is actually lesser than the 8% or whatever. No, then the very purpose is defeated. I repeat. I was not clear in my communication. So there is two scenarios possible. One scenario is, sir, 44 AD from day one I should follow. What does 44 AD say? I have to consider my income, actual income or percentage, whichever is higher. If that is the case, I do not have any dispute. I do not. But what 4484, with due respect, very badly drafted, 4484 says, so when you are offering 44 AD income, 1 year if you come out of the same, next 5 years you cannot get inside 44 AD. This is the law. So because of that, we are all, the interpretation looks like it's an optional section. That means you have to offer only 8%, 6%. So my personal opinion, that may not be correct, especially because of deemed income coming into picture. Because when your accumulated net assets are much more than what you declared, there may be danger of all the search season, deemed income, etc. getting attracted, higher percentage penalty, etc. So if it's whichever is higher, sir, no dispute. Okay.
The basic reason is to give it from tax rate is better of this.
Correct, sir. When you know that actually your income is higher, and if you are still not offered,
No, we have to offer.
we have to offer. Because then we both are in the same boat. We are in the same boat. So I am talking about a scenario. So Illa sir, law has given me an option, because trust me, majority of the practical scenario we just take the turnover into 6 for last minute. So 15th September we are going to file these returns. Correct? No, all these returns we are going to file on 14th or 15th. Sir, the client came late and also easy approach. But in that case, next 3-4 years or 10 years, okay, if that continues, that's a dangerous proposition. In my opinion, it has to be whichever is higher. Probably when you reasonably know the turnover is around 20 lakh, 30 lakh, the margins are reasonably lesser. In that case, okay, you go by turnover into 8% close. But when you know a business where the margins are reasonably high, you must go for whichever is higher, in my opinion, okay? Otherwise, that is not a true spirit of the 44 AD. I hope you are reasonably agreeing. Yes, sir.
Now, because our knowledge was digitized.
Yes, sir.
I do that. In the next 4 or 5 years, automatically you get.
That's fine. But sir, again, sir, digitized economy. Again, I'm requiring extra 2% black money. Extra 2% black, because digitized. So they are telling offer only 6%. So what I do, bank mein total receipt kitna aa gaya into 6%. My actual income will be much higher. That's more dangerous.
5 years, now within 4 or 5 years, probably most of the things are getting digitized.
That's okay. That's right.
Will be net.
That time this law itself may not be there, so probably I think we'll have a different law.
Take 10 years now.
Yes, agree. No, I think next 2-3 years. I don't think it will take more than 2-3 years. Okay, fine enough. Let's move on. I think so let's come back to the original question now. So 44 AE, you are supposed to offer for heavy goods vehicle, as per Motor Vehicles Act, about 12,000 kgs. Heavy goods vehicle, rupees 1,000 per ton per month or part of the month, per vehicle. Okay? Whereas other vehicles, so they don't use a heavy or small, they say other vehicle 7,500 per month. And that's mainly meant for our people having small tempos, etc., lorries, less than or equal to 10 vehicles. There again 10 vehicles should be including taken on hire purchase. Including taken on hire purchase. If you are having less than 10, then you have to offer presumptive income. Now if my income is lesser than that, so I say no sir, 7,500 nahi hai, sir, one second. Nahi hai?
No, it's coming. The question is, the person's owning.
One second, I'll just come to this, one second. Yeah. So, no, I can give you. So, 7,500, or what per month, whatever you are supposed to offer income. You are supposed to offer income. Now, if I offer lesser, if I want to offer lesser, I have to go for books of account and tax amount. There also one small anomaly. Let's say my friend Chandran, okay, he's having first year he started with one tempo, small, medium vehicle, small vehicle, 7,500 to 12, 90,000. He wants to have fun. He says, no sir, my income is 85,000. 90,000 he should have offered. He said 85,000. Even then he has to go for books of account and tax rate. Unlike 44 AD and 44 AD, where they said, if his total income is below basic exemption limit, don't worry. So you don't have to go for books of account and tax rate. So another example I tell, Chandan's case, he has got one tempo, 7,500 to 12 months, 90,000. But he says for Masti, 85,000. 85,000 individual is below taxable limit, 2.5 lakh limit nahi hai. But still he has to maintain the books of account and tax rate. Whereas Rahul's case, this Pani Puri business, 20 lakh is the turnover, 20 lakh into 8%, 1.6 lakh. He says, no sir, our pass only 5%. Last said, don't bother. Because anyway it is below 2.5 lakh, no books of account, tax rate required. So in 44 AE, moment you offer lesser than the prescribed, you must go for books of account and you must go for tax rate. There is a logical reason there, because 44 AD is meant for resident, individual, HF, firm excluding LLP. Very rare cases, LLPs are excluded from the purview of partnership firm income tax. Whereas 44 AE is applicable even for a company. So 44 AE, so I am not going to dispute that point. I will come to your question, sir. Point number one. So next point is 44 BB. So oil exploration, where you are supposed to offer 10%. 44 triple B, foreign company offering 10%. These three sections, if they are offering lesser, if they want to offer lesser, they can go for books of account and tax amount. Clear? Now there are two other sections added. 44 BBC, Goa, some of us would have got Goa, cruise. So cruise ship, obviously the income is high, you have to offer 20%, 2024 budget. 44 BBD has been introduced in 2025 budget. So you are manufacturing something, electronic item, something. So there you are supposed to offer 25%. Now when 10% fellow wants to offer lesser, he can offer by going for books of account and tax account. I am worried, my dear friends, 44 BBC and 44 BBD, there is no such provision of offering lesser. So I think it is an accidental omission by the law, because see 5% aircraft, 7.5% for shipping. Logically, GGB 5% is the income they wanted you to offer. Again you want to offer lesser, losses I will not give you. But 10% they gave the option of offering lesser, whereas 20% and 25%, don't you think, especially in the initial years, when you are operating the cruise ship, your expenses may be high, your income may be lesser, you do not have an option. I checked in 2025, correct me if I am wrong, okay? Even the 2025 budget, they have not amended this. The provision should have been there in 44 BBC as well as 44 BBD and also in 44 AA and 44 EB. Both the places they missed referring these sections, meaning the new section 44 BBC, 44 BBD, both the cases you must offer minimum, you must offer 25%, 20% and 25%. You cannot offer lesser. Is it clear? You cannot go for lesser because cruise ship etc. starting they may not have, and sometimes something goes wrong and the business is not happening, their income may not be so much. So it's unfortunate that they are not given the books of account and tax rate option, they should have given. So coming to that point, sir. So it says owning if I am not wrong, the clarification is there. Ownership includes your taker on hire. Any point, sir? Yes, that's it. So even again there also anomaly, there are a lot of, not anomaly, Anomaly. No, don't take any political corrections now. Okay. So I said, yeah, one second. So there also, hire purchase. Now when you take an asset on hire purchase, so as per AS19, let's take our basic AS19. AS19, so we have operating lease and finance lease. Very clearly, the finance lease, okay, says the lessee can claim a depreciation. Tata Motors, I take a car on hire purchase. Obviously, I am the person who is enjoying the car. I said, sir, when a tire puncture ho gaya, Tata Motors, you are the legal owner, you can come and repair. I cannot say that. So I am the substantial owner, I am the beneficial owner, I should claim the depreciation. But income tax, circular number 2/2001 says, I can't hear anything. Lessor should claim the depreciation, irrespective of the accounting treatment. Okay, right or wrong, I don't. 2001 circular. Okay, unlike 1943 old circular, where it permitted hire purchaser to claim the depreciation, here only the lessor can claim depreciation. Okay, and in the context of 116 Ind AS 116, that may be further disputed. Let us not go too much into that. Point number one. And here for 44 AE cases, ownership includes taken on hire purchase. Why I said anomaly? Because one place you say, no, hire purchase is not an ownership because you cannot claim a depreciation. Section 32, you cannot claim a depreciation. But here you are saying, no, ownership includes taken on hire purchase. That is the anomaly. Yes, sir.
Here's a presumptive profit taxation in whatever section. So presumptive taxation is applicable for the people who cannot maintain books of account and loan. How come we have to fill up receivable, we have to fill up cash, payable and stock in the forms? I discussed with so many people, I have never got any satisfactory answer. So if it is a presumptive, why should I maintain books of account? When I don't maintain books of account, what logic is there in asking for these details? I want to know.
Yeah.
Probably this is a question all of us are facing.
Yeah, see sir, I have partially answered that question. My understanding of introduction of presumptive taxation, some of us may know even old 44AF. So 44AF retail trade initially they introduced, then they see 44AD was civil construction etc. around 20 years back. Okay, so now they are merged. My understanding, obviously, if you look at the memorandum, the intention of introducing this section is the ratio of at that time. Now when you digitize, ratio of assessing officer is disproportionate. So every assessing officer cannot look at the chota mota turnover, do all those things. So what they said, okay, let us give the benefit to the assessees. Whatever the turnover they have, so that's earlier the limit was lesser, now 200 lakh. 200 up to 200, 2 crore is a small amount. They say up to 200 lakh, you just offer 8% or 6%, close the matter. That's the first point. Second point is, however, my continuation of the discussion is, assuming you have a reason to believe, not reason to suspect, income tax, reason to believe, not reason to suspect, reason to believe that your incomes are higher, you still have to maintain the books of account and consider whether this income is higher or 8% higher. So intention of that section should be utilized in the true sense, only for very small business people like Pani Puri fellow, Pan Bida person, 20 lakh, 30 lakh, and when the reason margins are lesser. When the slightly higher turnover or slightly higher margin, when you know, you can afford maintenance of books of account, you have to maintain the books of account. This is my understanding of 44 presumptive income provisions.
So you mean to say still I have to maintain books?
So this again is substance over form we say. So whenever you feel like, say, I have a client, 30 lakh is your Pani Puri turnover. Possible that his income may be little more than 8%, it's okay. That's small cases. Whereas when you know the turnover is 200 lakh and you know margins are normally 40%, at least test, you can do 1 year P&L account gross profit, you test and you see if it is substantially high, you must maintain the books of account. Otherwise you will be stuck in 68 to 69.
More than 8%, if I want to declare 50% and declare my question is, what is the logic behind asking for these details?
So,
what is the logic behind asking? It looks so illogical, no?
No,
if you are not maintaining books of account, say I have 50%, I will declare that's okay.
Correct, sir.
Now, you are telling me not maintain books of account, you are telling for the details.
Yeah, that's again a department issue. Okay, so he is asking why department is asking so many details which are otherwise not supposed to maintain. Correct, sir? Others not support. That's again, like that so many anomalies are there where, so they say this but they ask something else. Okay, that is a practical scenario that we can't help it, sir. That is a practical scenario. As you only said, let's wait for the new law where I hope all these anomalies will be nullified.
But sir, as a general practice, even if I don't maintain books of account, and if I give
No, sir, please serious.
if I give a credit,
Sir, yeah.
this is my view, I can.
Yeah, yes, sir, please.
Even if I don't maintain books
books of account, but if my turnover is below 2 crores, even if I give on credit, I will be knowing at any point of time what is my credit or data. So I think that information can be shared.
So again, so
Even if my books of accounts are not maintained, debtors, I know how much I
so
received.
it says basic financial data like debtors, creditors, then stock details will be there. You can
Only
use.
approximate data we can share. We can't give perfect
Oh,
data.
I'm worried.
Practically, we don't think that is possible.
I agree with both of your view, but approximate data whether income tax law takes or not, I really don't know. I was reading one of the books of Vedanta. They said Dvaita was introduced very recently. I was shocked. I'm really deviating. I'm not an expert. Recently, 13th century. So they said what is introduced recently. So they, in the context, what they are telling is Advaita came much before Dvaita, something like that. They are telling. But recently means what? It's something like in the class I used to tell 100 rupees big or small. 100 rupees big. It all depends. Now Rahul, my friend, when he's going to temple, 100 rupees is a big amount. 1 rupee, but I have So whereas when you go to coffee day, Rahul, I know. So along with the attachment, so 2000 rupees chiller bro, I know. So it all depends. It all depends on the context. Correct? No? Materiality is the beautiful version of yes. Yes, sir.
When you go to the temple, it is detachment.
Detachment, I know, detachment, that's right. So it will not get detached. I know, I agree. So Rajiv sir, Rajgopal sir has got better explanation. Fine. So I think we'll move on. Yes sir, yes sir. Yes sir, yes sir.
He will have, let's say,
Sir, only schedule.
no, it's okay, I'm low.
Yeah, okay, right.
Transporter, he will have 5 own trucks. He may have another 20 trucks. Generally, they also operate on the aggregator basis. So they have this concept of
Agree.
GTA. All the cricket players.
Yes sir.
They are coming very few to their own.
Yes.
Balance will be taken from others. In an example, let's say 5 own trucks. Another 20 is taken from so many people. So he will go under 44 AE for 5 trucks, and he will also go under 41 AD because subject to the 2 crores.
Agree.
On the 20.
Yes, the 20 is not on hire purchase.
So it is not a
No,
higher purchase.
okay.
It is aggregated.
Agree.
That is all. It is not a higher purchase.
So such question is, point is, not question. Mr. X has got 5 own trucks for which he has to go for 44 AE and other 20 some other model taking it on aggregate basis whatever and it is. So for 5 trucks he has to go for 44 AE. For other truck it comes on 44 AD because 44 AD eligible business excludes 44 AE. So that's why he has to go for 44 AD. Yes sir.
That twist to the same question will be.
1 second. Before that, to add to that, so when you are computing 44 AE turnover, 100 lakh, 200 lakh, 300 lakh, 1000 lakh, 44 AE turnover should not be included. 44 AE turnover should not be included. Yes sir, please.
Same example, 5 is on. He will go under 44 AE. Comes to him only. The balance 20, in some cases what they do, he retains his margin. Okay, for truck, let's say some margin, like a commission.
Yes sir.
And the balance, he gives it to the actual truck owner.
1 second. So he is also a commission income.
There are two scenarios.
If he is having a commission income, he is out of 44 AE also. 44 AE also. Yes sir.
Then that means then again subject to.
He has to go for normal computation. So.
Subject to the limits.
Yes, sir. So such question is, I have 5 own truck. I will go under 44E. Clear? Other, I have taken it on aggregate basis. Actually, I have some arrangement. Truck 20 trucks, and not hire purchase. That 20 trucks, I will come under 44 AD. Now, if I am having a commission or agency, we are also out of 44 AD. Then how do I offer? All those cases will come under the normal computation. What happens nowadays? So we are talking about presumptive income. It is not compulsory that everything should come under presumptive income. So it will come under normal. Whatever the income you earn, income or loss, you can go accept. Like for example, I am a non-resident individual. I am out of 44 AD. I am a company. I am doing a business. I am out of 44 AD.
So if I show under 44 AD, balance 50 trucks, the real owner will not show anything.
So you are not talking, you are not having commission and agency business.
No.
Okay, and you are showing 44 AD.
Yes, I will show.
And real owner, what he is getting?
I will pay him some, whatever money arranged.
But he said that should be some name, sir. Nomenclature.
Anyway, for me, if I am under productive taxation, expenses it is deemed to be.
For you, okay, sir. But he has to offer something in his income return.
That is the question I have. No, for example, I will pay maybe in cash. I will do whatever.
Sir, I don't hear anything. So I have not heard anything. Yeah.
Sir, even though I pay through banking channels, he did not show anything because I have already offered under 44.
Sorry, sir. I am worried. That's an application of income. It is not a diversion of income. So it has to be taxed. So for you, it is an expenditure. Or you offered presumptive income. 92% is deemed to be an expenditure. That means for that person it is income. 100% whatever you have paid is an actual income.
Again, he also may go under 44 AE or whatever.
Depends. 44 AE may not because he is having a goods vehicle. He suppose less than 10 vehicle. 10. He may be.
That's what I'm saying. He might go under 44 AE.
Possible.
So the cycle is.
But the question is, 44 AE if he is having, where is the fried income for him?
He will give. I will give him a spring.
No, that may not be possible. It will be too much of deviation because, so anyhow, this is only my person. So I receive, let us assume my friend Rahul is having 20 trucks. So I take it on aggregator basis, whatever name you call. I do the activity. Whatever the freight I would have collected, I show in my books of account. I offered income. Then the owner of the truck, if I give some amount, it may not be coming under 44 AE, but because he is not receiving a freight at all. 44 AE is for those who are having goods carriage vehicles and having the activity. Now, in your case, if you are given to me, probably it may not come under him, this carriage. And also, when you have 20 vehicles, anyway it's out of 44 AE because maximum limit is 10. Yes, sir. So, yes, sir. Yeah.
Commission agent, whether it is agency, whether it is a profession, sir.
Commission?
Agent, brokerage and commission agent.
Broker-
Whether it is a profession.
The commission agency may not be because 2 within bracket 36. Profession definition says profession includes vocation. So it's some as if we understood anything. So if we go to one shop, they say go to another shop. Profession includes vocation. VOCATION, vocation. Now what is the English meaning of vocation? Application of skill, knowledge, expertise in a particular field. Now whether commission activity satisfies the test of skill, knowledge and expertise. If you say yes, it is a profession, in my opinion, majority of the cases it may not be. It may not be a profession. In my opinion, it should still come under business only. Business only. Two reasons. One is this reason. Second one is the eligible business definition 44 AD says it excludes agency business, excludes commission income. Question of exclusion comes if it is otherwise included. It is otherwise included. So that's why it's a business. It's a business. So I repeat. Sir's question is, I hope it's not boring yet. Not yet. Okay, thank you. Yeah. So commission or agency activity, is it a profession or business? My opinion, it is a business for two reasons. Number one, it may not satisfy the test of skill, knowledge, expertise. Skill may not. Second one is definition under 44 AD for eligible business says eligible business excludes agency business, SSC earning commission income. So if I exclude from eligible business, it is otherwise it is a business. Otherwise I would not have called it, I would not have excluded from the business definition. So it should be business. Okay, sir? Right. Yes, sir. Someone there. Yes, sir.
For 44 AD and ADA, GST should be included in calculation.
Oh, that's a very interesting question. My turnover, that's not discussed anyhow here. I'm happy I was discussing whether our issues are enough for 3 hours of that. So I think it's enough for 30 hours. So we have so many issues. Sir, his question is 100 lakh turnover scheme for 44 AD. My turnover is 90 lakh sales plus 18%. For easy sake, 110 lakh. So tax on it candidate, my turnover should be 90 lakh or 110 lakh. I repeat. One second. Sorry, we have the habit of repeating being teachers. Yeah. So my turnover bank account debit 110, to sales account 90, to GST collected 20. I have followed exclusive method of accounting. Second example, I follow inclusive method, bank account debit 110, to sales 110. So now in the given scenario, whether my turnover, if I follow exclusive method, my turnover is 90 lakh. If I follow inclusive method, whether my turnover is 110 lakh, or irrespective of my method, turnover should be 90 lakh or 110 lakh. This is the question. Right, sir?
90 lakh.
Yes, sir. Yeah, 90 lakh. Why, sir?
GST is payable.
GST is payable, but you're collected, no, sir? Government is. So collected and paid. So you're collected and paid, that's why. So I think majority of them say it's 90 lakh. Next, I think Gajendra says otherwise.
GST is not an income.
Not an income, so you should not consider. But 44AB doesn't use the word income. 34AB uses the word turnover or gross receipt. Income is different. Income is 224. It is different from turnover. So in that case,
Issues on tax audit.
is that?
Issues on tax audit by ICI.
Yeah. Issue, yeah. So we have good number of honorable Supreme Court decisions which are before amendment to 145 capital A. That case law holds good even today only to the extent of computation of total income. Berger Painski's honorable Supreme Court decision, methods of accounting for indirect taxes are revenue neutral. Whether you follow exclusive method, whether you follow inclusive method, your total income should remain same. It cannot, because as all of you have said, collected and paid. Collected and paid. But I am worried after amendment to 145A, which says purchase, sales and inventory must be under inclusive method. Must be under inclusive method. ICDS Roman number 2 of income tax. So which is also connected to accrual method of accounting, which also suggests you to follow inclusive method. So in my opinion, today, whether you follow exclusive method or inclusive method, turnover is 110 lakh. It may be totally against many of your views, sir. My opinion, please read it, because we had some clarification, etc. also with the ICA, etc. That is all applicable before 145A, which was amended maybe 5 years back. Now 145A very categorically says income tax you must follow inclusive method only. If that is the case, purchase, and if you go and see 145A very clearly, purchase, sales and inventory, all the three has to be inclusive method. How for 44AB purpose your turnover is exclusive of 20 lakh GST there? So it may not be a pleasant answer, but I feel that answer. So I cannot follow. There is a Sanskrit sloka, Satyam Priyat, Priyam Priyat, Na Priyat, Satyam Apriyam. Whatever the unpleasant truth we should not tell, but today is a forum. This is a forum we should accept. So earlier, yes, and even today, the budget pen case, income is concerned, income remains same, provided I collect and pay. I collect and don't pay, still income, no? So that reason also I am worried, my dear friends, it is still a part of the turnover. Because the law doesn't say, the law itself has told, whatever you collected, if it is income, so it will be allowed as an expenditure when you pay. Now if you don't pay, there are a lot of people who don't pay within time. And also 43B says within 139 due date, if you don't pay, it is disallowed. That means it is expenditure. Now look at the reverse calculation. It is expenditure only when it is a income. Income is a part of the turnover. I am worried. Today, turnover should be 110 lakh irrespective of the method of accounting. It may be totally against many of our views. I never disputed about income. Income is remains same, but turnover should be 110 lakh. In my opinion, all of you can please revisit 145A, which compels everybody to follow inclusive method of accounting. Inclusive. 145A as well as ICDS too. Yes, sir.
If that being the case, then while deducting TDS, they say.
Yeah, so, but there's a question clarity. So when it comes to if we again go back to the service tax law, 194J, they made that provision. Other provisions, there are no clarity. They gave somewhere happened, then we say. So today, when you do the TDS, we don't have to do it because it is not income. That's collected and paid, same logic. But when it comes to turnover 145A, what do you do? 145A, we very categorically say it is a part. And also our 3CD. If you look at the 3CD, so whether the tax, indirect taxes are passed through the P&L account, you have to make a comment. So probably from that angle also, it should be inclusive only. It should not be exclusive. Is it clear? Yeah.
If I have a turnover of about 70 lakhs,
Yes, sir.
then GST I will not be covered under 4488.
70 lakh plus GST, 20 lakh. So 14 lakh.
So I will not be covered under 4488 because I will
Loss receipt. Loss receipt. Yes, yes. Yes, yes, I agree. So you are telling 60 lakh, 70 lakh. 70 lakh plus 14% level, cost of 75 lakh. In my opinion, you will not get the benefit of 4488. No, if I go by 145. Okay, na? Right. So this is again subject to interpretation. It is not my conclusive answer. You cannot, because if you go by the budget page case and if you extend the same thing, you can say, and also sir has said, TDS purpose is not a part of the turnover. You can extend it to it. Law because 75 lakh, 200 lakh, small difference. They may not be too harsh. It is not. We are not talking about 1,000 crores, sir. They may not be too harsh. You may still take a chance. But if you ask me, academic answer, it is a part of turnover. My opinion. Yes, sir. Sorry. Oh, knowledge 740. I didn't realize. Yes, sir.
I have two scenarios.
Yes, sir.
I have a turnover of 2 crore, business, not profession. So I want to offer 5%.
Sir, yes, you work out there. Sir, I have become very hot. Turnover just. Yes, sir. Please.
Yeah.
Sorry.
My turnover is 2 crore, eligible for 4480. And I want to, in the first scenario, I want to offer 5%. So, in the second scenario, I want to offer a loss, minus 1%.
Okay.
So, in which case tax audit will apply?
Both the cases.
But when I offer negative income, loss, it's below the maximum amount which is not subject to tax.
That is a very interesting question, a very beautiful question. For this, I have a very straight answer. 200 lakh is our turnover. How much? So 8%. 200 lakh into 16%. Sorry, 8%. How much you should offer? 16 lakh. Now I offer 1%. How much? 200 lakh into 1%. What is my total income? 2 lakh. So, which is below the basic exemption limit. Deepak sir, correct no? Deepak, right, Amrita? Yeah, right. So whether I should go for books of account and tax audit? 100% yes. And really, here anybody disputing with me, I'm sorry, I don't accept. If that is the case, everybody having 200 lakh, 300 turnover, offer 0.1%. So, my dear friend, the interpretation of the total income there should be what should have been the otherwise total income. So, not what you offer. 200 lakh into 8%, 16 lakh, which is above basic exemption limit, books of account and tax audit must. No second. Otherwise, everybody can offer whatever the turnover. You are trying to keep it below 2.5 lakh, and you say it's below tax. No, it is not what you offer. What should have been? I will give a different scenario. 20 lakh turnover into 8%, 1.6 lakh. There you offer that too. It should be after adding other income also. You have got FD interest, etc. So it's below 2.5 lakh. Otherwise also don't worry. 200 lakh into 8%. You offer whatever lesser percentage, 100%. Books of account and tax rate must. Otherwise, everybody can say, so whenever your turnover is less than 200 lakh, less than 300 lakh, you don't want to go for books of account, you say 0.1%, you go 1%, they're not practically possible. Books. Yes, sir? Coming.
It has to be a genuine case that there is a law.
And genuine case, you go for it. See, the law doesn't say that I not do, but how do I avoid the loss? If I say, how do I avoid the loss? Maintain the books of account, go for it. Card accountant also has to survive, sir. Yes. Yeah, one second, sir. Is it clear? I'll take two issues because at the end I don't want to miss those two issues. Then I'll take all the questions. I'll be here till what last person leaving here. Okay? Yes. Right. So, yeah, so 1 minute. I'll just finish these two cases. Don't mind. Sorry. Because the two issues I thought I must discuss because I want to know the answer. Yeah. So somewhere we should be selfish, no, sir. What do you say? They carry duplicate slideshow. Kya? Right. Is it visible? Fully. Yeah, fully. Yes. There are a lot of issues. But anyhow, you want to have a little fun, so much of, you can have a little fun. Artificial intelligence, अथवा don't underestimate anyone's also. Just one. Now I know this kind of things are normally not happening in CA.Chandrashekar program. I really don't know why it should not. Thank you. So I think we should come out of this. Let's have a little fun, not very serious, because this is what my opinion. I don't know whether everybody agrees, but let us change. Yes, lot of issues are there, but two issues I want to discuss. Yeah. One is a very basic question which recently suddenly struck. April salary, not this case, don't worry, not this, okay. April salary, I am an employee of, say, Kiran Limited. As per the appointment letter, she says salary is payable, let's say 1 crore, okay, whatever amount. Payable, 1 crore, she's looking at me, no, you not do I know. Example, bro, yeah. So, salary, 1 crore. April salary, she says it's payable on 5th of every month. That means when does it fall due? 5th of May. And she pays me on 5th of May. So when should I pay the TDS? Remit the TDS to the government? Payment. 7th of June or May? June. April salary. So it accrues in my books, in employer books in April 30th. So, but she pays me in May. So when should you do the TDS? May 7th or June 7th? May 7th or June 7th? Yeah, I am worried. My personal opinion, 99.9% of the people we are paying on 7th May, which may be wrong. Because as sir rightly said, 192 very category. Forget about accrual due. 192 TDS is always on payment basis. That means you paid when? May. That means May month khatam hone ke baad 7th of June. It should be 7th of June. Now it's a very small ignorance by all of us. But look at the corporates paying crores together, salary and TDS. Working capital, cash flow, financial management. Is it not a big thing to discuss? Because many of what will make our life easy. What? 1 second, sir. April salary, 7th May will pay. So 192 doesn't talk about accrual due, kuch bhi nahi hai. It is purely on payment basis. You are paid in May, that means obligation arises in May, you are paid by 7th of June. That's one issue which I will take the questions at the end. The last issue which I will be discussing, very interesting, nice issue. I started with the 54F and 54. Sir, I have 5 minutes time? Yes, sir. Thank you, sir. Yeah. If you don't give us, I'll take. It's okay. They are friends, it's okay. No problem. Maybe other sessions with our institute, mother institute, it's okay. Doesn't matter. So, take a scenario of sale of a land. So, Mr. A sold a land for 8,000 lakh. I keep everything in lakhs so that it crores, lakhs, confusion. Nahi chahiye. On 22nd July, there is a lot of discussion about that pending for information. 23rd July, 24th, the big day, okay, where the capital gain asset definitions have changed. One important point is listed units of the business trust. 12 months is the time limit now, all those things, okay. So then 23rd July onwards, the tax rates have changed, blah, blah, blah. Time doesn't permit, not dated July. So Satyaka, I am talking about pre-23rd July scenario. You sold for 8,000 lakh. Stamp value imported 9,000 lakh. 8,000 into 110%, 880. It is higher. That means stamp value is applicable. Clear? 50C is applicable. So 9,000 lakh. Brokerage paid 100 lakh. So the cost of acquisition, 2,001 I kept it. Let's say 200 lakh. And indexation is permitted. If I go by the calculation, literal reading of the law, what is my consideration? 8,000 or 9,000, whichever is higher. So 9,000 lakh. Brokerage paid 100, then NSC 8,900. It is sale of a land. The indexed cost calculation will not worry. So 720, LTCG 8,174 lakh. Now when I sell land, I get 54F exemption. 54F exemption is proportionate to your investment. So if I go by little interpretation, calculation, assuming I invested 1,000 lakh, I invested 1,800 lakh, sorry. What the law says, 54F now says, your consideration invested should not be more than 10 crores. Should not be more than, there is a fundamental difference between 54 and 54F. 54 says your capital gain exemption cannot exceed 10 crore. 54F talks about, please read it, okay? Investment, the net sale consideration, what you invested should not exceed 10 crore. So by accepting that phenomena, so my net consideration is how much? 8,900. 8,174 is my capital gain. I can invest maximum 1,000. Even though I invested how much? 1,800 lakh. How much I can consider? Only 1,000. My exemption is restricted to 918.43. That's the exemption. That last figure is exemption. Are you clear? My first point is, when I received only 8,000 lakh, how can I invest 9,000 lakh? So this is a very practical. It is not a what you call the Tampa statement, because it is a very common scenario in Bangalore, especially a city like Bangalore, where the land rates are skyrocketed, and we still may not be showing the right value. Stamp value will come into picture. So when I sold the asset actually at 8,000 lakh minus 100, so 7,900 is the net money in my pocket. How can you expect me to invest more than 7,900? But what exemption, if you look at even a software, probably what you have done in office, so net sale consideration, how much I consider? 8,900. Whereas accordingly, my exemption should be 980. I totally disagree with this for two reasons. Reason number one, I do not have 8,900 in my kitty. What I have is only 7,900. Reason number one. Reason number two, 50C is a deeming fiction created only for the purpose of determining the sale consideration, full value of sale consideration. It cannot be for investment. Strong authoritative answer, point number 3, definition below 54F, which majority of us would not have seen. They are defined what is net consideration. Net consideration means amount received minus expenses. That means for all practical purposes, even though the top level your figure is 9,000 minus 100, 8,900, for all practical purpose, your investment purpose, your net consideration should be 7,900. So if you look at the last box of the second column, my calculation is for 7,900, capital gain is 8,174. So your consideration is lesser, capital gain is higher. For 1,000 lakh, how much it should be? My exemption is coming to mathematically 1,034. Now, whether I am eligible to claim 1,034, I don't know. But if you go by the little interpretation with which I started, 100% we are eligible. Because 54 says exemption cannot exceed 10 crore, whereas 54F says your investment cannot exceed 1,000 crore. I am not considered more than 1,000, but if you look at the anomaly of maths there, my consideration is lesser, 7,900. My numerator, the capital gain is higher. That's why I am getting an exemption more than 1,000, more than 1,000. If you are not understood, I repeat for the last time. Normally 50 CKD, what is the consideration? 8,900. On the top, you must take 8,900. There is no dispute. But when it comes to the subsequent, below, investment purpose, should I consider 8,900 or 7,900? In my opinion, it should be 7,900 only for multiple reasons what I explained. Especially because the definition given below 54F, which says net consideration means amount received. It cannot be 50C. Deemed consideration, it cannot happen. And because of which my calculation is mathematically coming to above 1,000 lakh. You all say, sir, when investment only cannot be more than 10 crore, how can the exemption be? Here is a maths, here is a maths which can be above 1,000 lakh. Have you understood the case scenario? Maths, you don't worry. Have you understood the case scenario?
Yes.
Yes. Right. That's it. With this, if you have any quick questions, we can take it. Yes, sir.
But technically, tax is whatever GST. Whatever.
Before that, before everybody leaves, I have a small request. Can I just conclude with the request?
Yes, sir.
Yeah, please. Which I'm sure all of you are aware of it. Okay. So wherever I go, I request people. It's a pure request, folded hand. Bharat, India is going at a very good pace. Don't get into political point. It's not relevant for us. We are happy with our own politics. So, but the Mother Earth is crying, the nature is crying, and very important. I saw one beautiful video. Here, I don't have time to show that. Now, what we majority of we believe in any religion, we believe in the karma theory or maybe liberation, etc. So, what we think, many of us were talking sustainable development. Sir, whatever I do, I know next generation they may suffer, next generation they may suffer. My dear friends, the next generation what we are talking about may be me only. Because if we are believers of the Punarjanma, okay, so next Janma will be me only. Next 20 years, 30 years, 50 years again if I come back, I may not have an oxygen, I may not have a water, I may not have. At least let us be extremely selfish in this matter. I should not suffer. See, earlier we used to say that my family should not other. At least I should not suffer. For that purpose, I request all of you to reduce and avoid single-use plastic. Single-use plastic, I am not talking about anything. And 100% avoidable. If anybody says not possible, you call me, okay, I will come and solve the matter, okay. Everywhere possible. Only thing is we should have willingness to do. Point number 2, actually, you should be ready to put a little extra effort for yourself. So, number 1, whenever we go for shopping, we just walk and whatever the items we take, we accumulate lot of plastic, they are not biodegradable. Second one, so all this plastic bottle, okay, I told also they have taken care reasonably, but still this also can be avoided, okay. Touching and drinking the plastic bottle adds even cancerous cells. Nanoplastics are damaged brains also. We chartered accountant cannot survive without brain. I hope all of you understand.
Yeah.
So that's why AI cannot. I don't start with that. Today AI cannot. So if you still think about it, it's our natural stupidity. We cannot. So that's why. So please avoid. So don't drink by touching. That's why if you have seen, wherever I go, I carry some steel bottle. We all can carry. It's not a big deal. We have become extra comfort, extra luxury, and more important, golden chaco concept. Free siguttalva kuikonbidata. So free alva. So, but free also will accumulate all the health problems, disasters, etc. So, my request to all of you, carry some bag, carry steel bottle. Whenever you go, carry some cloth bag. Or olden days people used to do it. So, cloth bag is small. 500 gram hi-fi mobiles we can carry. But this one is a level bag. How can I? I'm a chartered accountant. I think level when the disease comes, nobody will be there. Correct? No? They are very serious terms. Point number 3. Educate the children that they can eat chocolate, let them eat, because obviously when they come to our age, they cannot eat. Sugar would have been already inside the factory, isn't it? So let them eat, but let them not throw it on the road, etc. Because we are, and anytime we ask, no, non-modular, sir, I am not done that, okay? But non-modular, what they are modular? Who has done it? So somewhere. And compostable. At home, all the garbage, etc. What we do, any of free plastic has come, we dump and go. And that plastic again goes to the earth, not biodegradable. Compostable bags, again being in Karnataka, you should know, out of the sugar cane, out of the corn, bags are available, all are available, online you can do it. You can put little extra effort. So please avoid single-use plastic for myself, not for our next generation, because as I keep telling, what my yoga gurus have told, okay, one sir is there, he always says in Kannada, Parisara namagoskara ide, Parisara nannadalla. In Kannada, it means environment is for me, but environment is not mine. No sir, if you say it's mine, inhale, hold it. It is yours now. Why are you leaving it out? Well, it's not. So we cannot dispute. That's why my request. So now I have not taken the permission of anyone to talk about this. Even last week there was an IAS professor's session I took. That also I did, because it is my Janmabhoomi, it is my Bharat, I have to take it. If anybody stops me from doing it, next day I will not enter that place. That's the point. So my request is, please avoid single-use plastic for our Bharat, our nation and humanity. Yes sir, over to the questions.
And also, if it's possible, now it's not, please don't drink like this. Scientifically, they say, when you have to sit and drink. If you drink like this, you may get a knee pain in the long run, knee pain. That's a sit. And if it's your own bottle, touch and drink. Okay? So this is what has been scientifically shown. That I have not done a research, but I believe it. What's wrong? Sit and drink. Then you don't ask why you are standing. A different reason. Yeah. Yes. Happily married. I said no. So even after people know it cannot be happily married. People marry. That's okay. I know. So I asked Rahul, do you want to marry? So I said, he said, no, I want to be happy. No. You should also experience all tensions, disasters in life. And I always say, all youngsters, please marry. Why only we should suffer? Everybody should marry. Earn income, pay the tax. Yes, sir.
Yes, sir. This question is regarding the inclusion of indirect taxes like GST in turnover. Logically, I am a government agent collecting tax on behalf of government of whatever government, and I am paying it. So how come it becomes my turnover? Point number two, point number two, it doesn't pass from P&L. Okay? It passes from current liability. The third thing is I don't generate anything out of it. How it becomes my income? That's clarity I want.
So first point, I have already answered your question. It is not income, it is a turnover. So the discussion is 44AB doesn't talk about income. It talks about turnover. So one second. That's now I am answering. Turnover should include GST because 145A. Why 145A then? 145A says it should be inclusive. Second point to your first question. So all of us say, sir, anyway the government is collecting and paying. How do you calculate GST when there is import of goods? GST experts. Import of goods, you pay custom duty. इसके ऊपर GST you pay the GST even on custom duty. So custom duty is already good. Why you are paying GST on that? See, I am not saying that the GST should be a part of the turnover. I am not saying that. But I am saying if I go by the literal interpretation, it should be a turnover. Now when we say that, sir, anyway, I am not collecting and paying. I have only paid custom duty. On the custom duty again, GST is applicable, sir. Why you are paying again? There are some cascading effect even today happening. ನಮ್ಮ ಕರ್ನಾಟಕದ ಭಾಷೆಯಲ್ಲಿ ಕಾಸ್ಕೇಡ್ ಆಗೋದಿದೆ ಇನ್ಕಮ್ ಟ್ಯಾಕ್ಸ್ ಅಲ್ಲಿ ಏನು ಮಾಡೋಕ್ಕಾಗಲ್ಲ ಕಾಸ್ಕೇಡ್ ಆಗ್ತಾ ಇದೆ ಕಾಸ್ಕೇಡಿಂಗ್ ಇಫೆಕ್ಟ್ is there, you can't help it. It's there, sir. We can't help it. It's there. But it's always disputable, as I said to my friend. It's disputable. But 145A, if you read, verbatim reading, literal interpretation, it has to be included. That is my personal view. Okay, sir? You are not happy, but you will be satisfied. Yes, yeah, I know. That's it. You should be happy, but not satisfied. Yes, sir. That's good. Yes, sir.
I have a question with regard to section 192.
Yes, sir.
You said the April month salary paid in May, the TDS payment has to be paid on 7th of June.
Right.
So, which assessment day should we use? It will be obviously say if I April 25, then I will take 26, 27. Now, March month salary, which becomes due on 5th
April. TDS needs to be paid on 7th May. So, assessment will be 25, 26 and 26, 27. If your answer is 26, 27, will it be disallowed under 40 only?
Good, very good, sir. Excellent. Now, before that, so I have a lot of other questions, incidental. So they should just, no, you cannot help it, sir. They ask the question. So I know. No, I know. Right, no problem. Sir, let's take a simple scenario. This question is there for years, not just today. I'll tell you a simple example. I am an employee of your sir. Appointment letter says 1 crore per year salary. How much? 1 crore per year salary. And it's a startup. He says, I cannot pay the salary in the first 5 years. I'll pay in the 6th year. Then, sir, 6th year. But for cash flow problem, he paid in the 9th year. For him, very serious note, for him, if he follows accrual method of accounting, expenditure is 1 crore each year, first 5 years. For me, salary income is the year of due or receipt, whichever is earlier, section 15. So that means 6th year. TDS, from the time 192 is introduced, is always on payment basis in the 9th year. Now, before I answer your question, you answer now. So 9th year, if he doesn't do the TDS, which year will disallow? This question there is no answer. And then this question, and see, I hope all of it. And it's a legal interpretation, no mistake. So 9th year, if he is paying, he should do the TDS. So now he does the first year, time limit would have been over. How can we disallow? Go back and do updated return now, they have made 4 years, etc. But still, how do you go back? Fine. Now coming to your question, sir, don't mind, I just wanted to add that point. So in your case, March salary paid in April, TDS is May. So accounting wise is an expenditure of the employer. TDS doesn't define your method of accounting. Point number one. So your method of accounting, if you are following accrual method of accounting, you should have been the expenditure of 24-25. 24-25 you should have done the TDS within the due date which is prescribed by chapter 17B. You are done by 7th of June. It is still within that. Or even if the resident case up to 139 due date you are done with. If you are paid within 139, it is allowed for the current year. Only when you pay beyond 139 due date, the 30% will be disallowed and will be allowed the next year.
What if I use the next assessment year?
You cannot. You cannot, sir, because you being an employer, it is an employer call. Now you being an employer, sir, are you following cash basis or accrual basis?
No, if I use 25-26 and I am making the payment on 7th June, then I will I be treated as a TDS default?
Sir, only 1 second before that. So you are paid me the salary in April. 5th April. So you are following accrual method or cash basis?
Accrual.
Accrual means you should have booked it as an expenditure in March. So March expenditure. So question of disallowance comes if it is otherwise allowed. So it is an expenditure if 24-25. You have done the TDS within the 139 month, not even 17B, okay? Then it's allowed for 24-25. You cannot book it as an expenditure next year. You cannot. Because of the accrual method. If it is a cash basis, it is an expenditure of the next year, in the next year alone. What is the question, sir? Yeah.
The second question was, like you said, for already a 2 crores turnover, we have to offer 6%. And if someone has a loss of say 1%, there is requirement for tax audit. So when they are filing ITR, there is a specific column which says if your turnover is between 1 crore to 10 crores, then if 95% of the receipts or payments are through digital payment, no need. So this 2 crores turnover, what I am doing it, and if I make loss, would I still be liable for tax audit?
Sir, 44 AD limit. So what, sir, is a slightly different question. 44 AB has 4 limits for turnover. Normal 100 lakh. 44 AD cases is 200 lakh. Whereas the cash receipt is less than 5%, it is a 300 lakh. 44 AD and this 1000 lakh no connection. Because moment you are above 300 lakh, you are out of 44 AD. You are out of 44 AD. That means you come under the normal provisions. So assuming, so I'll take a simple example. 800 lakh is your turnover. 1 second, I'll just finish my easy question. Tough question will come later. Yes, sir. So, sir, 800 lakh is your turnover. 800 lakh, 100% digital. 100% digital. I don't come under 44 AD anyhow. So, and 100% digital. Everything, receipt and payment, both. There also there is a drafting error, those who want to know. Okay. So, I have everything received and paid in digital mode. That means I do not have 44 AD, I do not have 44 AD. Clear, sir? Now your question, 200 lakh is your turnover. 200 lakh you have received everything in digital mode. That means you have to offer how much? 8%. 6%, yeah. But you are offering 0.1%, that's a loss. You are offering lesser than prescribed. If you are offering, so that too, it goes back to the original question, whether 44 is the optional section or compulsory section. If you say the compulsory section, and if you are in 44, let us say, for easy sake, last year you had a 44 AD case. This year you are offering, let's say, 0.1% of loss. You are offering lesser than 44 AD1. 44 AD4 says you must go for books of account tax. So even though you say that I had an option, here you do not have an option. So having a lesser turnover is adversely affecting. That's not the point. That's it. Lesser than 300 lakh turnover is not allowing you to offer lesser income without having a tax audit. So what such question is, very genuine question. If I have 800 lakh turnover without tax audit, without income, I can offer any amount, any loss. Any amount, any loss. When I have less than 300 lakh turnover, I have to offer, if I am coming under the compulsory provision, 8%, 6%. If I offer lesser, books of account tax rate must. Okay, sir? Yes. Yes, sir. Yes, sir. If they permit, I don't know. Yes, sir. Yeah, please continue. I am okay. You know me. I always say yes, sir.
Sir, can you just elaborate on technical and non-technical profession?
Specified professional. That word. Yes, sir. Yeah. Sir, 44 AA within the bracket 1. Use of the word specified professionals. Specified, not technical. There is not specified. Specified professionals are defined there. I said a film tea artist by short form. film accounting, A for accounting, film artist, interior decoration, legal, medical profession, film T, technical consultancy, engineering, architect, author and representative, company secretary, information technology. So whoever have been defined there, they are only specified professionals. For them, books of account comes under 44 AA, which is the bracket 1. They will also come under 44 ADA, where up to 50 lakh or 75 lakh, they can go for presumptive income. All the professionals, they come under 44 AD, 8%, 6%, subject to the tax liability of 44 AD. Okay, sir?
What all the coverage for non-technical professions? What all can be covered?
Musician, I said,
Okay.
Bharatanatyam dancer, barber,
Can an advertising agency?
possible. If you think it is a skill, see again, the test there is 236. So is it a vocation? Point number 1. Then, is it a skill, knowledge and expertise? Advertisement, if you think that the creativity involves skill, knowledge, expertise, then probably yes. Otherwise, it's a business.
It is a mix of.
Mix means it should business. Mix is the business. Yes, sir. Mix means because, see, that's how we can take leaf out of our professional skills, sir. I being a chartered accountant, can I do palm business? I cannot. Yes, sir. But I know. You can eat, sir. You cannot. I know. So you cannot. So normally, most of the professions, if you look at it, they will have the restriction under their respective professional ethics law that you cannot do anything else.
No, the customers have directed us at 10%. Most of it.
That's irrelevant, sir. That's irrelevant. So what you are saying is, so here then the TDS calling me as a professional doesn't mean that I will become a. No, that stand may not hold. No, sorry, sir. So what sir says is here then a 10% TDS. So it should have come under 184J. So is he a professional? Need to argue because maybe he doesn't know who am I or is wrong understanding, etc. It may not conclude that I am a professional.
Better to do the agreement and invoice for.
No, even agreement, invoice, etc. also, for me that may not be the sufficient document because for me profession is skill, knowledge, expertise. Application of this. So if you can test it, yes. Otherwise, even your document cannot help you. Sorry, sir. Yes. Yes, sir. Yeah.
Sir,
Yes, sir.
under 50 lakhs. So can I show with books less than 50%? With books of accounts.
So you're a professional. So 40 lakh of the gross receipt.
Yeah.
You want to show only 10%. Yes, with books of accountant audit.
Why audit?
Because you're offering less, sir. So 44 AB within the bracket D. 44 AB within the bracket small d says, you being a 44 ADA professional, offering lesser than the prescribed, tax audit is a must. Must, because the law says so. Interestingly, there is a possible case where tax audit is required, but no books of account. So today's session something I started. So what? Tax audit is required, no books of account. I'll take a simple example. My friend, so Chandan is writing CA, let us say January 26. He becomes a CA by God's grace in February 26. He starts his profession. So his anticipated receipt is 1 lakh. How much? 1 lakh. 1 lakh is below 1.5 lakh, the limit under 44 AA1. That means you don't have to maintain the books of account. Clear, sir? Now he says for musty. So 50% instead of 50% he wants to offer 40%. So 1 lakh into 40%, 40,000. He has got some other income, some FD interest, some other income, which makes him having a total above BL. He has to go for tax audit because 44 AB clause D says he has to go for that. But books of account is not required because 44 AA1 is gross receipt less than equal to 1.9. So audit ಮಾಡಬೇಕು book ಇಲ್ಲ ಏನು ಮಾಡಬೇಕು ಗೊತ್ತಿಲ್ಲ. So this is a very rare, 1.5 lakh is very rare, but that is the law. Okay, sir? Yes.
Sir, if it is 44 AD, then it is turnover is less than 1 crore, and I am declaring a profit is less than 2.5 lakhs. Then what is not required?
Your declare, sir, I think Deepak's question. What you declare is not important. What should have been?
But sir, 44 AB subsection E says
that if I am opting for 44AD and if I opt out from 44AD and I still continue to 5 years, I need to maintain books of account. In such cases, audit is applicable. Up to 2016, it was clearly saying that if the profit you have declared is less than 6%, less than 8%, then audit is applicable. But thereafter, it says that if you opt out from 44AD and continues to maintain books of account for 5 years, then 44AD is applicable.
Agreed. So that's what I'm saying. So when you're offering lesser, so then for next 5 years. Now the question is, so as sir has asked, is it about what you offer or what should I, like 200 lakh is your turnover. Into 1% you want to offer. Forget about other income. So can I say no, I'm not in the 44AD? Because 200 lakh in 1% is 2 lakh. 2 lakh is below 2.5 lakh. So I don't think so because 200 lakh into 8% is 16 lakh. So the total income what they are referring is deemed total income. What should have been the total income under 44AD? Not what we offer. What should have? That should be interpretation. Yes, sir. Yeah, sir, last question.
Sir, not related to income tax, sir.
Yeah.
Holidays, sir.
Not related to income tax. Don't confuse me, sir.
Regarding you are telling in between, India is going another 3 to 4 years, digital economy. Our payment is in.
It will happen, yeah.
Okay, but nowadays the GST department issuing such a manner that even UID also they issue notice. Because of that, the small shopkeeper also they are rejecting to show that.
I know. Articles should have work, no, sir. Articles assistant should have some work, no. So that is the issue, the notice, so we should keep them engaged. You don't get articles. There's a different, I know, there's a different reasoning, I know. So very small issues, they are still issuing notice, so all those things, but that is not within our control. We can't help it. Yeah. Unfortunate, but we can't help it. We conclude? Yes. So, yes, sir. Yeah, please. I don't know, they are rising, that's why. Yes, sir. Yeah. Manjinath has told dialogue dinner birthday anta. Nan dinner illa, adike, nan tension illa. Yes, sir. So, his question is, your turnover is, let us say, 150 lakh. You are not in 44AD and you continue to offer 10%, 15%, etc.
So I have taken 44AD for a couple of years, then I opt out of 44AD and made
so next 5 years, books of account and tax rate must.
Even if I offer more than 8%.
Yes. Once you come out, the 4484 and 4485 says next 5 years you must maintain the books of account. Because they say you came initially for my lower income, now you offer lesser. How do I trust you? 5 years I don't trust you, losses. I trust you, sir. Now you can offer more. You offer more, whatever, doesn't matter. Books of account audit must. And one more interesting. Suppose your actual income is only 2 lakh. You still want to offer 3 lakh. Can you? No, you cannot. You cannot. Okay. So it's something like an auditing we have come across. If there is a cash shortage in a hotel, that is okay. Surplus bandre yeno gappa martave. So cash shortage is acceptable. Suppose every day he is getting excess. So as per the sales bill is 10,000, but he said 11,000 cash. That means sales would have been 20,000. So he is trying to temporarily please the owner. So surplus is dangerous. Yes, sir.
1,000 tips.
1,000. Yes. Yes, sir. Okay, sir. Yeah. So if you are so once you are in 44AD and if you have come out of 44AD, next 5 years compulsorily books of account audit must, as long as your total income is above the BM. That point is there. If the total income is above the basic exemption limit. If it is below that, you don't have to go for it.
But if my turnover crosses 3 crores, then
so there is a question my friend has asked. Moment your turnover is above 300 lakh, you are not inside 44AD only. You can do whatever you want. Okay, sir? So, because the eligible business definition is, so eligible business means any business other than 44A1 and turnover should be less than equal to 200 lakh or 300 lakh. Moment it is about 300 lakh, you are not inside 44A2. Nobody is there to ask. You are like bachelors, nobody is there to ask. Yes. You conclude? Yes, sir. So, pay your taxes and keep your head high because Indian economy is growing better. And however, my friend here, Chandan says, pay your tax. The IT department says, pay your taxes with a smile. But he says, I tried, but now they want cash. He went and infant road department. Pay your tax to smile. He went to the literal interpretation. He is smiling, but the department lady said, no, that's not going to work out. Yes.
Department tax cutter.
So concluding, so the phone calls of our friends. So boy to boy, 58 seconds. Boy to mom, 45 seconds. Boy to dad, 20 seconds. Boy to girl, you read. Girl to girl, husband to wife. I know. That's it. Mom to married daughter. That's interesting. So this is not created by me. 4 hours, 5 still goes on. Amruta, correct? We think 4 hours, continue. Wife to husband, 12 missed calls. No, you would have got a call. She's getting it. So leave correct the Chandrashekar dash. So thank you so much. It was really privileged. So I was little apprehensive about taking this decision because my mother today is also auspicious for me because it's my mother's Punyatithi. Okay, on this day, Mother Institute, I got an opportunity to share a little bit thought, and I also got a lot of learning. Thanks for the opportunity. Thanks to thanks to the Bangalore batch, all our friends, and thank you one and all. And please be happy always. God bless you.
Offline, sir. Who is right?
Yeah. Members, 2 minutes, please. We'll have a word of thanks to the speaker. So before that, I have 2 announcements to be made. On 25th July, we have new audit of Primary Agriculture Cooperative Societies training by Cooperative Societies Audit Department, Government of Karnataka. 3 hours CP program. And the next is on the same day, we have DPDP Act, Data Protection and Data Privacy Act 2005. Right, total 6 hours CPA program will be held on 25th. So please register for yourselves. And on 29th and 30th, we have state level conference from Bangalore branch and on Princess Line Palace Grounds. So please visit the website and do register for that. Yes, sir. Thank you very much. It was really a very entertaining session, I believe. Yeah. So, the climax was really very good.
Entertaining only when you came. Before that, it was taxi.
Taxi. Yes, sir. Thank you very much for that. I am told. So, I request the chairman to please hand over the to the speaker. Yeah, members, thank you all for joining us, and so, everyone, thank you. That should wrap it.